Hey, look.
What up?
We're live, apparently.
Oh, yeah.
Yeah, we're here. We're here, everyone. We're here. We're live. Didn't realize that for a second, but we did it. How's everyone doing? Happy Friday. I think everyone in the stock market is glad it's Friday as well, because how long is this losing streak right now for the S&P 500? It's long. Is this going to be week 6 or week 7?
7.
Week 7. You know how long it's been since there's been 7 down weeks in a row in the SPY? I'll tell you.
Oh, 708, I guess?
That's what I thought, too.
2000.
Almost. 2001.
Okay.
You got to go back to like the summer, I think like August of 2001 was the last time we had 7 straight losing weeks in the S&P 500. So not great, Bob. Not great, Bob.
Yeah, similarly, the Dow is on pace to finish down for its 8th straight week. Do you know the last time the Dow was down 8 weeks in a row?
Great Recession.
Nope.
Okay, if not the Great Recession, I'm going to say, oh, wow. I'm trying to think. Was it like the early 90s?
Nope.
Really?
Keep guessing.
All right. Was it the late 70s?
Nope.
Am I on the right track?
You got to keep going back.
Was it the early 70s?
Nope.
Was it the mid 60s?
Nope.
Was it the Great Depression?
Nope.
Dude, has it ever happened?
1922.
Holy cow.
Before the Great Depression.
Wow. That's amazing. I did not know this.
Yeah.
Holy crap. That's unbelievable.
It's, what year is it? 2022? It's 100 years.
It's been 100 years since the Dow Jones fell, would you say 9? 8 weeks?
8 weeks in a row.
Holy crap. That's unbelievable. That's literally, I don't even believe you. It's so unbelievable. I don't believe him.
You can look it up.
Check me. I'm going to do that. At some point during this show, I'm going to look that up.
All right.
Someone in the chat corroborate what was just said. Shelly's, thank you. I don't wear this shirt very often, Shelly, but it's going to be a hot one today, so I figured I gotta dress light. All right, what's the plan for the day? We have a few guests lined up. We're talking to the merger partner for a SPAC. The company is called Mondee. We're talking to their CEO, Prasad Gundumogula. I hope I'm saying that right. We're going to ask him to help us out. I love one of our team members here at Benzinga, Zoltan, who helps us out with booking guests. And he puts these notes for us in the doc, Bree. And so Prasad has a rather long and difficult last name to pronounce. So what does Zoltan do? He goes, the last name is pronounced like it is spelled. How is that remotely helpful?
I think sometimes that's helpful. I don't know what they say.
Gundumogula? How? Dude, phonetically. Spell it out so we know what we're doing here. All right, anyway, that's going to be at noon. We'll talk to Prasad, last name TBD. We're going to have Tim Quast on the show, Market Structure Edge, at around 12:30, 12:40. We'll have Tony Benson on at 1 o'clock, and that's the show for the day. So you asked a question in the title of the show, Aaron. Will Tesla stop? Will Tesla keep dropping? TBD on that, but let's run that intro.
Do it.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news. Hey, Jim Cruz. Dropping by the chat. Jim Cruz. Hope you had a good week, man. Nice meeting you in Vegas last week. Is that bullish? Is that a Fast and Furious reference you just made? I think it was. All right, let's bring up the handy dandy Benzinga Pro. Okay. Get that up on the screen. and talk about stuff. So, first things first, SPY. As we just talked about, SPY will close down for the week. You know this. You've seen this. Oh, look at that. We're near the lows of the week. Is that true? But let's look at just today, though. There was a reason to feel optimistic, relatively optimistic, right? This morning, right? Because we were up in the overnight session. We didn't really go down yesterday from the open to the close. It was a choppy day. Chop is not the same as a drop. So a choppy day, and you're up overnight, and you come in here and you think, okay, all right, we've got some leg to stand on. And that leg has since been taken out. And now here we are at the low of right near the low of the week. We are all the way back to March 2021 prices. Excuse me. And that's where things stand in the S&P 500. As far as the NASDAQ is concerned, well, it looks a little bit worse. We are down, where are we down? November of 2020. If you bought the Qs in November 2020, congratulations. You've given back all your gains. The IWM has been the ugliest looking chart of the major indexes for the last 6 months or so. And now we're at this gap. And this is on the weeklies. Now we're at this gap on the weekly chart from November of 2020. What do we always say with gaps, right? It's a psychological thing. They tend to get filled. I don't know why. It just does.
Not always.
Not always. They just tend to get filled. Price tends to have memory. So let's just say this. We did hold that low of 168. We held it last week. That's your bogey, 168. We fought through that. Call me bearish, all the way down to the 150s. But let's just hold that. Let's hold that weekly low. And then you said the Dow, which is not an index or an ETF that I look at very often. So let's bring that up on the screen. And you're right. Look at that. Aaron Bree does not lie. 1, 2, 3, 4, 5, 6, 7, 8 down weeks in a row. Brutal, brutal, brutal. All right. So what's the deal with Tesla here? Aaron Bree came in this morning, guns a-blazing, wanting to sell all his Tesla. Do you own Tesla?
Yeah.
Okay. You came in wanting to sell all of it. Is that true?
It is true.
It is true. Whoa. Okay. Let's not do anything rash here.
I don't think it's rash.
Why do we want to sell all of our Tesla?
It's still overvalued compared to the overall market. I mean, it's trading at 13 price to sales.
Oh, wow, that's high.
Forward PE of 60.
All right. That's lower than it was.
It's lower than it was.
Glass half full.
But basically, Tesla, like other speculative assets, have gone crazy over the past 2 years. And a lot of that speculation has been Tesla's, has that first mover advantage in EVs. They're by far the furthest along company. They have the best infrastructure for EVs. No denying that whatsoever. But we're getting to a point now, Spencer, where I think the increased competition, not just domestically, which I've talked about that a lot, and I think Tesla will face domestic growth problems if it's not able to get out its pickup truck in the next couple years, because we are going to see
which we don't know anything about that.
Yeah, right. Which we're going to see a barrage of electric pickup trucks entering the market over the next couple years, whether it's from Ford, GM, Rivian, you name it. So I think that's Tesla's domestic growth problem. China has been a huge growth aspect for Tesla for a very long time, and there's a lot of indications that similarly in China, China has a bunch of EV makers there. Warren Buffett's backed Boyd, which is my favorite Chinese EV maker.
NIO is up today because they uplisted.
You have NIO, you have XPeng, and all indication is that these other companies will start taking market share from Tesla in China as well. So if the speculation has been that Tesla is going to be, and I'm just going to make up some numbers here.
Yes, please. I love made up numbers.
Yes. If the speculation for the past 2 years has been that Tesla is going to make up 50% of the market share of electric vehicles, and in reality it ends up being 40%, that's going to be very bearish for the stock. Obviously, we don't know that right now, but that's my thesis. I think overvalued, and unless the macro environment changes here where growth and these more kind of speculative names come back in favor,
yeah,
I don't think Tesla has anywhere to go but down.
You mentioned a few of the other EV makers. I think the growing consensus, and I think I've heard Elon Musk say this as well, is it seems to be that if there's going to be a major challenger, it is Volkswagen.
Yeah, and
right?
I also...
Volkswagen is doubling, tripling, quadrupling down, and seems like they're ahead of their traditional automaker peers in the race to
100%. Last
get out as many EVs as possible. So let's pull up that Volkswagen chart.
December. So not this previous December, but the December before that. So not December 21, December 2020.
Yeah.
I was
Volkswagen
with my mom. She was car shopping, and we were at an Audi dealership, which is owned by Volkswagen. And I was shocked because we were on the floor of the dealership, and they were like, "Oh yeah, here's our new Audi e-tron fully electric EV." And I was like, "Wait, I thought only Tesla had fully electric EVs." And this was 2 years ago, and it was pretty freaking cool, and I think a little bit cheaper than the Tesla EV model. And that's the thing. I mean, you have all these. Tesla's a very high-end, nice car, but if you have electric Mercedes, electric Lexuses, electric Audis, people have more options. Tesla's not the only option on the market anymore.
No, it's not. I hope he won't mind me telling the story. If he does mind, well, whatever. But I was on the phone with Jason Raznick last night, our founder and our CEO and our boss, and talking about all sorts of things. And while we're on the phone, he claims he got a text. I guess he was walking around his backyard, and he claims he got a text from his wife saying that she just read an article about Kathy Wood, and she wants Jason to take their daughter's bat mitzvah money and invest it in Tesla. That's what he told me last night. Now, if you've been following, Jason and Benzinga for a while, you know that Jason Raznick has been bullish Tesla basically for the last decade. He loaded up on this thing 10 years ago, 9, 8, 7. He's been buying this thing basically consistently for the last 10 years. I'm pretty sure he sold. He lightened up a little bit along the way. I think in the last couple of years or so, he probably sold some, but Tesla has been his largest position for a long time. I don't think the Raznick family needs to buy more Tesla. Not that I'm their advisor or anything. I'm just some guy. But I thought that was funny to hear. It just goes to show there are people not like us that are not looking at the stock market every day, that are only just now, as crazy as it seems, only just now realizing, oh, Tesla seems like a pretty awesome company. Maybe I should look into this Tesla thing, right? So I don't know. I've got some Tesla exposure. It's indirect, right? I own it via index fund.
Well, that's the other thing too. Is if I sell my Tesla, I'm still gonna have exposure to it.
Right.
And for someone like Jason's daughter, who, if they invest in the stock now and might hold it for 10, 20, 30 years, that might be fine. That's great. But
that's not what you're. That's not.
Well, if all right, just simple math, right? If a stock's $100 and it draws down 50% to 50.
Yeah.
Now it needs to go up 100% to get back to where it was.
Right. That's math.
Right. So I would rather, if Tesla, I think Tesla can easily drop. I mean, it's down, 7% today? 6%?
It's down 6% today.
6% today. I can easily see it draw down another 20%.
All right.
And then you're going to need 50% gains to get back to where it was. So if you like Tesla long term, what I'm going to do is I'm going to buy back at a lower price.
Yeah. So that's what I was about to ask you. So I've never actually bought Tesla stock before, or Tesla option, anything on Tesla besides the ARKW fund. How about this though? What would you be willing to do at 600 and
sell the stock?
Hold on, what's that? 546? What is that? I'm trying to let's call it 540. 540. What would you be willing to do at 540? Because I'm on the weekly there, and you see that's where you have this sort of area of support, at least on the weekly candles, is 540. So what about can I interest you in some Tesla at 540? Can I interest you in like?
It's more interesting than here, but I don't know. I mean, I think once we get down to 540, we'll be in that boat where it looks so bad that I wouldn't even want to touch it.
Well, that's what that's what you do when you buy stocks at support. You say, okay, I'm buying it for this, and this is my stop. It's right here. Fall through the floor, and I'm taking a quick loser. Right? You're buying the thing at support with the idea being you either it's a huge winner if it comes back, or it's a quick loser. So, something to think about. I don't know if I don't think I'm doing a very good job of convincing you. So, just to be clear, are you going to be selling your Tesla?
I've been trying to since this morning.
What do you mean you've been trying to?
I can't get a hold of my FA. And I tried to sell it while it was up this morning. Now it's down 6%.
Oh man! Oh, this is in your separately managed account.
Yeah.
Oh boy. Oh, that all right. Then I sympathize. Although I've never been in that position before. Good luck. Easy.
Oh yeah. I mean, that's the other thing too. Is I think as
Tesla falls, Elon gets margin called.
Well, not necessarily, but I think a lot of people with I think it could have kind of like an exponential.
Maybe. I mean, look, Tesla. It's not the best performing stock of the last decade, but it certainly is one of them, right? Congratulations to everyone that bought the stock. At $30 pre-split, $30, right? So now it's like $5. That means they bought it like $5, right? Because it was a 1 for 6 or something like that. I remember. Anyway. There are a lot of people sitting on a lot of gains in this Tesla. Great for them. It's not me. Is it possible that like just the next few years are tough? Sure. Yeah. But I was wrong on Tesla all the way up, so I'm not going to be that guy betting against them again. I'm just not going to do it. Interestingly enough, I mentioned NEO. This is not what you want to see. This is not what you want to see. So NEO is up today because two things. One, it got added to the Hang Seng Index, which is like basically the NASDAQ 100 of China, a major tech index in China. So that means why that's important is there are all these funds out there, all these index funds, all this money pegged to the Hang Seng Index that are now forced to go into the market and buy NEO. So you do have some forced buying there. They also listed their shares in Singapore, which doesn't do anything for the company, but it does give more liquidity to the stock. I'm sure they probably raised some money in that offering, and so it's one of those things where it's like two things that are really good for the stock but do nothing for the underlying business. Anyway, that's why the stock was up this morning, and I hadn't looked at it really since the open, but it gave all those gains back. In fact, all of China was up this morning because they lowered a key interest rate, and all of those gains. This is Alibaba. All those gains have been given back today. So, in terms of macro headlines today, there was one, and it was China lowered a key interest rate. And every Chinese stock was up at the open, and every single one of them has given back its gains. Not what you want to see. This is exactly what you see in bear markets, right? In recessions. Stocks going up on good news and then not holding those gains. And that's what's happening here. So I remain...
Oh.
What?
Here he is.
Oh, there's the financial advisor. All right, Aaron Breed just stepped away to go. He's literally about to go. He's about to go sell all of his Tesla right now. Yo, guys, front run him. Go. Do it. Get ahead of this. Aaron's about to go unload years worth of Tesla positions. Actually, that's where he just went. He just walked into a room. Get some privacy. If you want to convince him, too late. We had our chance. He's literally doing it right now. So when he gets back in a minute, hopefully he can tell us what happened. Yeah, man. Good luck to him. Good luck to his advisor is all I can say. Okay, let's talk about retail for a second. If you missed pre-market prep today, we had, I think, one of our best interviews in a long, long time. I'll drop the link for you guys in the chat. We talked to Ryan Craver. He's been coming on our show for years. He's a retail expert, and at no other point in all of our prior conversations have I been as interested in what he has to say than right now, because of what's happened in retail stocks this week. So I'm going to drop a link in the chat right now. It's going to be queued up to Ryan's segment. And take a few minutes. It's like a 15-minute long conversation, and seriously watch it. I thought his insights were frankly incredible. Here, there, got it. Got the link. Hold on. Got the link queued up. There it is in the chat. Bada bing, bada boom. He had a lot of good things to say about Walmart, about Target, about what he would be buying and what he wouldn't be buying in retail. And this seems to be the overarching takeaway, was all of these companies, these major retailers, Walmart, Target, they massively mismanaged their inventory, right? They all couldn't get stuff into their stores when the global supply chain was a shit show. Nobody could get stuff into their stores, and then the supply chain like unclogged itself, and everything came flooding through the pipes, and all these extra orders came flooding through the pipes, and now they end up with more stuff than they need, than they can sell. So Walmart is down again today, though it's more or less flat, which I guess is a silver lining. Target is just a smidge on the green, if we can pull that chart up now. But yeah, you know what? It's interesting you say that, Obi. The summary was, don't buy retail. However, he did also say that it's hard for a guy like him to look at Target at 150 or look at Walmart at whatever it's at now, 118, and not like be a little bit interested, right? Because, and he said he's been along these stocks for a long time. So he said it's hard for him to not kind of get interested in Walmart and Target. He also said he likes specialty retail. Okay, look what we saw today with Foot Locker and Deckers, right? How is Deck doing? DECK. Yeah, still up 12%, though, off its highs of the day. He likes them. He likes Lulu. He likes a lot of specialty retail. And he likes stores that can manage their inventory, like TJX, which said they were doing that. So he did have pockets of retail that they like. However, that he likes. However, it's hard to fight the trend on these. Like if you just look at Raw stores today, is getting absolutely crushed. Is this the worst day for Raw stores ever? Down 22%. What happened during COVID? No, that was worse. COVID was worse. All right, worst day for Raw stores in 2 years. And so now the question is, like, you have all these retailers that are going next week, right? Like Burlington, which didn't even say anything yet. Down 15% today. Costco, which is the only one of these stores that we've discussed that I actually go to, is Costco. And at least from a front of the store, like in my own personal experiences, I haven't seen, like, it doesn't appear to me, at least front of the house, that they have. Well, no, Costco has no back of the house, so it doesn't appear to me that they have too much stuff. But that's just my perspective as a customer. We'll see what they say. Costco reports on Thursday, and the stock has been hammered through no fault of their own. But at a certain point, I would what is Costco's PE? Forward PE of 29. All right, if Costco got down to a forward PE of like 25 or 24, which would be a price. Well, I don't know what their earnings are going to be, so I guess I don't know what price it would have to be to get there. But I'd be, let's go by the price instead. I'd be interested in Costco. I'd be interested in taking a nibble. And I know I just said I don't want to buy anything long for like intermediate stuff or short term stuff, but like it's like a longer term thing here. I'd be interested. Like if Costco got to like 350, I would. Or no, wait. What's all this? What's all that? 380. That's like 380, right? If Costco, that's not even that far away from here, right? We're talking 40. We're talking $35. If Costco got to 380, I'd buy it. I'm a buyer at 380. I'll say that. Where was it pre-COVID? Pre-COVID, the stock was at 320. I'd buy it at 380. I hope it gets there. Lucas Jehoda is asking a great question. We can address your question. But before we address your question, my man Aaron Bree is walking back to the stage right now. Did he or did he not just sell all of his Tesla stock? Mr. Bree, what happened?
I sold most of the Tesla stock.
Oh,
we talked about the levels we'll be buying back on. We got some more. I got some more. He said he's looking at. Let me pull up the S&P.
Yeah.
He said he's looking at 3,500. That's his level. He said also, I don't know if this is bad news for retail investors. I don't know. I'm a retail investor, and I would want to know this.
Yeah. Tell us
He's
what we
basically
should
saying we'll know when the market's going to turn around when the retail investor flow stops going into
watch it when it washes out.
ETFs, equity. Just like when we start seeing, I guess people stop buying the dip. That's when the market's going to turn around.
Okay, what indicators do we use for that? Do we use?
I think inflows, outflows.
But into what?
ETFs.
Yeah, but what?
Which ETFs?
Yeah, that's a lot of them.
I don't know. ARK maybe. I mean, ARK is probably
Right.
mostly retail compared to
ARK taking in a lot of money.
institutional.
I have my theories about that ARK money and where it's coming from.
A little conspiracy.
I obviously like when you look at like the inflows and outflows of a fund, there's no way to possibly know where that money is coming from.
Okay,
but my theory is that there is like one or two like gigantic like pension funds out there that are just in love with Kathy for whatever reason and are just buying. No, I don't think it's this is not.
I don't think pension funds really go for that risky asset.
You don't know that. You don't know that.
I don't think. It is how can we look at these flows? Retail investor flows.
Okay, very retail. Okay, so that in and of itself is sort of a black box. There's a number of things that we can do, and we have to go to our guest here in a second. So we may have to table this conversation.
Yeah.
But there's a number of things you can look at that will sort of gauge retail. You can use them as proxies in some respects, but it's impossible to get the full picture. Okay, you can look at activity from the retail brokerages, like all the retail brokerages that are public. So that's Robinhood, that's Schwab, that's Interactive Brokers. Morgan Stanley owns E-Trade now. When they report earnings and they tell you how many new accounts, net buying, net selling, that is one indicator you can use. You can use options data, options flow data, right? Like put call ratio, to sort of gauge, because I'm operating under the thesis that there's a lot of retail call buying, or was a lot of retail call buying right now. So that's another thing you can use. You can look at the flows into like the sexy trendy ETFs, like, which is really just ARK at this point. What else could we use as like a proxy for like retail money?
Well, that's why I'm asking, because I feel like it's hard to, like, I'll see the buy or sell and balance it, and it's just like hard to know, like, I'm like, what's coming from institutions, what's coming from retail. It's a very, very difficult thing. It's a very difficult thing to really know for sure. Yeah, I honestly, I didn't ask him why, because I wanted to get back on the show.
Oh, you should have asked him how he knows that. He's an advisor. He's got tools that we don't have.
Yeah.
You should have asked him. Can you make that your homework? Can you ask him?
Just text.
Because I'm just curious how he knows that. Because it's easy to say, oh yeah, when retail stops buying. When is that?
Well, I don't think he was making any prediction on that. I think he was just saying like that's a metric we could look at and see. But
Yeah.
I don't know which metrics he's looking at. But I also don't know the reasoning behind that. Why is that as soon as retail stops buying?
Because then that's when all the selling.
Oh, because they're selling to the retailers.
Because
they're selling, and then once there's no more buyers, then they want to buy.
Well, so no, the logic is that the market will punish the greatest number of people. So when it's like you are thumb wrestling with someone.
Okay.
It's like when you finally give up. It's like you're wrestling with your thumb wrestling, and you're doing it, and you're like, oh, okay, I give up. Then you say uncle, you say mercy, and you finally quit and you sell, and that's the bottom. It's a sentiment thing, man. I don't know. Can't explain it. All right, let's go to our first guest here, and then we'll maybe come back to this conversation. We're talking to, and Prasad, we are going to have to ask you to hopefully correct us, or no, hopefully not correct us on your name. What happened?
Did I say 1922 earlier? It's 1923. 99
Dude, come on,
years,
I don't
100.
care. Okay, I thought you had a serious thing to say.
No.
Okay, Prasad Gundumogula, which I hope I said that right, is the he's with Mondee. He's their CEO. This company just announced earnings this morning. They're merging with a SPAC. Let's bring them on and talk about what they do and the numbers. And I hope I got his name right. Prasad, how are we doing today?
Very good. How are you?
Did I get your name right?
Yes, you are very good.
No, you can tell me if I got it wrong. I won't be mad.
You're good.
Okay. Thank you. Appreciate that. All right. Prasad Gundumogula, as I said, CEO of Mondee. You guys just announced earnings this morning. Quickly, what does Mondee do?
So we are a travel technology company and a modern marketplace, and we operate in the B2B and assisted travel sector, which is a $1 trillion market place, and we are a leader in a subsegment of that market. And with our focus now is on the gig travel side of it, and we are a company of 10 years, and with a positive EBITDA and very high growth. We have been growing at 43% year over year in the last 5 years, except COVID years, and our revenues are at 177 million in 2019 with a $45 million of EBITDA.
Why go public now, especially via SPAC? There's not many SPACs happening right now. So why do this now as opposed to like 2 years ago, or even wait 2 years?
It's the time for the business. So we see a lot of opportunities in the market, especially with our the growth strategy. We have a dual growth engine. One is on the organic side of it. We have been growing very well, and an inorganic through M&A acquisitions and all. So we see that is a great opportunity for us to buy some good companies at a very good rate at this market. And we think that time to market is critical, and we wanted to go ahead with the public market is the right vehicle for us to execute our plans, and we are proceeding with that.
You reported this morning a net loss of $7 million in the first quarter, which was a smaller loss than the same quarter a year ago. But give us a timeline on profitability, because that's all we care about right now on Wall Street is profitability, profitability. What is your timeline for that?
So first thing first, we are a positive EBITDA.
Okay.
So the net loss is is a function of all the other things below the EBITDA. We already achieved positive EBITDA in 2022 first quarter.
All right, so that's I guess that. Okay, for your positive EBITDA, that's good. But in terms of just the bottom line, though.
Yeah. So the bottom line, we are working on it. I mean, it comes from a lot of below the EBITDA line. It's operating wise, so we are already profitable from the EBITDA standpoint, and we continue to grow, and we are expecting this year a good growth and a good EBITDA, as we have given in our forecast.
You mentioned doing some M&A. Are you at all concerned about valuations right now? It seems like there are massive markdowns, not even on Wall Street, but in private markets too. There are just massive markdowns and valuations being lowered really across the board, especially in tech. Does that concern you at all?
It doesn't. The valuation, which is for M&A strategy, if the companies are fitting to our strategy and our vision, and if it's coming for less, I think it's a good news, right, for us. So any companies that we acquire, put into our platform, we have a long history of doing it. We have acquired 14 companies so far, ever since that we started the business, and we were able to get 3 to 4x return on the companies. So we are continuing with that path.
Can you explain the business, like who your customers are and how you make money?
Yeah. So our customers are a closed user groups, the B2B travel, like such as travel agencies, the business corporate travelers, companies, and a closed user setup, any of them. So the industry is set with a total of $2 trillion market. Half of that, 50% of that, is on the online side of it, which is all disrupted by online travel agencies. On the other side of it is working on very archaic systems on the B2B corporate side of it. So we operate in the B2B closed user groups side, and we are a leader in the subsegment of that market. Our revenue streams are we get, it's a marketplace, so we have a take rate. So we have a take rate of 5% back in 2019. With all the new technology streams and the revenue streams that we added, the take rate is close to 8% now. So it's a good recovery story from the industry point of view. The industry is growing at a 50% year over year from 21 to 22, but Mondee is growing at 180% year over year, and we are nearly tripled our revenue from 21 to 22. And the drivers of that revenue streams are the fintech, the fintech revenues, and the ancillaries, the martech, in addition to our core revenue streams of commissions that we acquire. We get it from the the agent markups as well as our supplier markups.
How much money are you raising from this deal? And is there a plan to raise more?
So we have $240 million of SPAC that's coming in the trust, and on top of that, we raised $50 million PIPE, all equity at $10, which is unusual in the current market. And recently, we raised that PIPE to $70 million. So there are two very renowned investors have invested $20 million in our business at a full equity, $10 a share.
And then I guess just last one here. Does it concern you at all to see the relative weakness of growth technology stocks in the last 6 to 12 months? I mean, the market has not looked favorably on anything growth, and that seems to be what you are right now, is your growth company. I know these things move in cycles, so we were just in a really good cycle, and now we're in a really down cycle. But does that concern you at all?
Historically, we are a growth company and a value company, right?
How's that possible?
So we are growing at 43% organically year over year, and 63% with the acquisitions, and we are profitable. So which is the numbers are saying that it's a $46 million EBITDA in 2019, and we are back to positive EBITDA this year. So we are in that aspect. So we are growth and a value company.
Yeah.
So
all right.
Does it concern me? I mean, yeah. I mean, the market goes in different directions, but I think we have a very solid, revenue streams and the profitable business, and I think it's we anticipate a very positive things.
I'm imagining that the coming out of COVID served as a big catalyst for you, but I'm trying to think about what the next catalyst for you is. Now that we've already kind of come out of that, we are reopened more or less everywhere, with the exception of China, obviously. What is the next tailwind for you?
So the macro trends in the travel is very encouraging, which means that not only the recovery, the way that the gig economy and gig travel coming into the overall industries, they are the travelers such as the millennials and the Generation Z are setting the pace for the industry, and they don't have a platform. I think having us giving that platform and with the recovery play, that's a huge tailwinds for us for the future.
All right, Prasad Gundumogula is the CEO of Mondee. It's the merger partner with the ticker ITHX. That's the SPAC that will convert. Prasad, thank you for joining us today.
Thank you so much, guys. Bye now.
All right. AB, what happened in the market in the last 10 minutes? Anything that matters or no?
I was watching Tesla just in case, like, I was gonna think it was funny if it like bounced like literally right after I sold it, but
that would be funny.
Not what happened. It's just been moving lower.
All right, man. Hey, credit to you. You woke up with a feeling in your gut. It was.
I called before the market opened. I wanted to sell it while Tesla was green pre-market. I would have saved myself 7%.
The feeling was indigestion, but after the indigestion, you realized, there's another feeling in there, and it's I want to sell Tesla.
Yeah.
And then, okay.
What's that from?
Nothing. I just made that up. Well, I did.
All right.
I'm allowed to have jokes.
I know. I feel like maybe I've heard you say that before. I don't know.
It's possible. I made a poop joke yesterday.
I mean, I think anyone. I don't know. I mean, I get it. I get why Tesla's where it's still at share price. I think it's still super sexy. The growth aspect of it. I think there's just too much headwinds. I mean, think about it. We got a headline, I believe, from the month of. There was a month where there wasn't a single car sold in China.
Yeah.
That doesn't bode well for Tesla's next quarter.
But it can't get any worse, can it?
No,
it can't get any worse than zero.
No. But if Tesla, I mean, think about it. If Tesla hasn't missed on earnings in like I don't even know 2-3 years, like I don't know. So if they do on delivery, that could be another 10-20%. I will get back into Tesla. I've been actually. So fun fact, yeah. I had. So from my bar mitzvah, we were talking about Riley investing her money in her bar mitzvah.
Yeah.
I literally had, and this will probably cause you to have an aneurysm, but I had all my bar mitzvah money in one stock.
Yeah, wasn't it an Apple?
Yeah, it was an Apple.
Yeah, we talked about this.
Yeah, and my dad, who was an investor, like was a big time Apple, like he was the one that facilitated that. And he was like, you don't need anything else, just hold Apple, you'll be fine. And he was right. I mean, from 2010 to my bar mitzvah to when like 2016, I don't even know what the returns were, but they were great. Yeah. But I remember.
So why aren't you retired? Is my question.
Well, it
wasn't that much.
No, I mean, it's like $3,000 in Apple in 20. Well, I can look at it right now. What the actual percentage return was. But,
yeah.
And I ended up selling that portfolio to buy a car.
All right. So it did its job. The money did its job. It bought your car.
Yeah.
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 All right.
So from 2010 to like 2017, 355%. So 3,000. Yeah, I probably turned like 3,000 in like 15, but nothing crazy that I can retire on.
Yeah.
But I remember coming home from school one day, from high school. So this was probably in 2014 or 2015. And I had on like a piece of notebook paper I had ripped out of my notebook a plan how I wanted to reallocate my portfolio. And
Dude, you were so far ahead of me. I was not doing that in high school, I'll tell you that.
So I still remember it perfect. I can picture it was 33% Apple, 33% Tesla.
You're so smart.
And 33% Netflix.
That would have been amazing.
If we didn't do it. My dad didn't do it. I would have been like the best investor. Like
you would have been. What year is that? 2012?
14.
Oh my God! The timing of that would have been unbelievable.
Netflix? Yeah, I know.
Here, wait. Let's just pull up a chart. Let's go to 2014 here.
I could probably because I could probably find this piece of paper somewhere in my house, like somewhere in my old school stuff.
All right, here. This is 2014, and we'll do Tesla, we'll do Netflix, and we'll do Apple together. All right, look at the percentage gains since 2014 in these three stocks. The worst one was up 284%, but that's only here. Let's
is that Netflix after it's
yeah. So let's zoom in. let's zoom in on this, okay? And let's go.
I don't even want to think about it. Like, I don't even want to think about.
This is fun for me.
I wonder what like $3,000 in each of those stocks.
So
invested in
2014 to I just arbitrarily stopped it at September of last year. You're up 800% in Netflix, 500% in Apple, 1300% in Tesla. That would have been an amazing call. I feel like we haven't even addressed the news of the day on Tesla, which is the Elon Musk news from last night that he that he or SpaceX allegedly paid off someone, I guess a flight attendant, up $250,000 after he allegedly propositioned her.
Well,
and there are questions about how this affects the stock at all. I have thoughts, but did you have something you wanted to add?
Well, I just wanted to say,
Yeah.
I think the language there. So the Business Insider, the way it was reported, the payment wasn't alleged. It happened.
All
They
right,
have
so
documented
the
that.
payment happened. The accusations
Right.
are
So what?
are-
So what we can do here, and
Yep.
we're in America. You're innocent till proven guilty. We know there was a payment made.
right.
There's obviously a chance that this complaint was brought, whether it was legitimate or not. They said, hey, it's worth it to just pay this woman $250,000 and shut her up instead of going to court.
Right.
Elon is famous for not settling. He doesn't like to settle in litigations.
Yeah. Oh, I didn't know this.
Yeah, he
Okay.
doesn't like to.
Everyone likes to say they're famous. Trump says that too. I never settle. People settle all
What?
the time. Anyway.
Yeah, even if you could win a court case, there's often times where it behooves you to settle anyway, just because
Look at
like
that.
the time spent, legal fees. Whoa, that's the wrong.
Wait.
That's an iPhone charger.
Damn it.
Spencer's trying to plug an iPhone charger into his
Shut up.
MacBook.
Shut up. Anyway.
And so basically, if this whole thing were completely untrue, Elon Musk has a very clear course of action. It's suing for libel.
Yeah.
And if he doesn't, that's a very good indication that at least a lot of what's published in that article is true. Because if it's not like, me making a tweet about something, if you're a publication like Business Insider and you
Right.
publish something that is inaccurate,
You better be right.
you better be right.
You better be right.
And that's
or
the same. And I
you're
see people
screwed.
talking about Portnoy in there. Portnoy is
suing.
Business Insider, and we'll see.
Yeah.
I have a feeling that the editors and stuff
That
vetted.
they're gonna settle.
Oh, maybe.
Yeah, they're gonna settle.
Well,
That's always how these things
Wait.
go. They're gonna settle.
no, I don't think they'll pay Portnoy.
Somebody will pay somebody.
I don't think Business Insider will pay Portnoy because it
All
seemed
right.
like from what I've heard from like the editor, the woman who wrote the article, like a lot of these stories are like if these women come
Yeah.
forward and corroborate the stories, then how can they be charged with
Yeah.
defamation and libel?
Yeah.
So
Yeah.
we'll see.
All right, I keep seeing this thing about Henry Blodgett as well because he's the founder of BI. Henry Blodgett is barred from the securities industry. He's not allowed to give financial advice and serve as a fiduciary ever again for things that he did during the dot-com bubble. That has nothing to do with this, though, right?
yeah.
Henry Blodgett being barred from the securities industry for life does not have any bearing on an article published 20 years after the fact, right? I hope that should go without saying.
And I will say, I think there was more. I think the scrutiny was more fair with the Penn Bars or Portnoy one.
Yeah.
Where how it came out like the day before earnings. And
Yeah,
people
that was bizarre.
It was weird, and the
Yeah.
people are trying to make this similar. I saw like Unusual Whales tweeting today, like, "Oh, look at this unusual put activity on Tesla coming
Dude,
yesterday."
stop
It's like,
it.
dude,
Stop it.
there's unusual put activity coming in on Tesla every single day.
Stop it with that. Okay, so
Yeah, SPY officially in a bear market.
if
you
you
need-
wait, as if I needed this tweet to tell me.
Yeah.
Come on. Thanks, Dennis.
I think we can all look at our portfolio and know that.
Yeah, I didn't need that tweet to tell me that things weren't looking great right
we're in
now.
a bear market.
Okay, so everyone's going to come to their own opinion about whether they believe it or not, and that's not what we're here to talk about. But there is a question. The reason this came up in the first place was, okay, how does this affect Tesla? And the only question that you should be asking yourself in relation to this news, right? The allegation of that he did some bad things and paid someone off. The only question you need to ask if you're thinking about this from the point of view of an investor is, what do I think the chances are that Elon Musk steps down as the CEO of Tesla?
Which that has been
I'm sorry, not CEO, Techno King.
That has been your bold prediction for 2020.
That's the only question that matters.
By the end of
yes,
the year, Elon Musk would not be the CEO.
This has been my hot take. I said this on January 3rd, the first Monday of the year. My hot take for the year is that at the end of this calendar year, Elon Musk is not the CEO or the techno king of Tesla or whatever. I did not see this coming, obviously. But that's the only question that matters. If you think he will remain the CEO, then this should have no impact. I mean, maybe it's not to say it should. This shouldn't make you want to sell. If you think it does tilt the scales a little bit in him leaving the company, then that should concern the crap out of you, because we said this yesterday as well. There's no CEO in the business world that means more to their stock than Elon Musk means to Tesla.
I agree, and I think. Okay, so I want to address a few things. So Johnny Vu in the chat saying everyone, should thank Elon for Tesla discount. Yeah, you can say that, but you can also say there are people that bought Tesla up at $1,200 a share. If you think
somebody did.
Are they thanking Elon for
thanks, Elon.
46% loss? I mean, it's great they can buy it at a cheaper price now, I guess. I would rather have my stocks go up than down. But that's just me.
That's generally advisable.
That's just me.
Better to go up than down.
I don't agree that if he steps down, Tesla is done. I think a lot of the genius engineering done at Tesla
it's already happened.
It's happened. Yeah. There are a lot of really smart people that work there, including Elon Musk. If he steps down, there will still be smart people that work there. They have like 100,000 employees. Tesla won't go anywhere. Yeah, good job, Lineage.
Wow, Lineage.
Good job, Lineage.
Yeah, there's always a buyer for every seller.
Happy said you guys called this. I'll take a little pat on the back for that.
We did not call this. Aaron Bree, like last week, or maybe it was Monday, I don't know, time is a circle, said something is going to happen because...
No, it was really yesterday.
Was it yesterday?
I was reading the tweet where he said...
A few days ago.
Or maybe 2 days ago, the tweet where it was taught where he said the Democrats are the party of hate. Now watch their dirty tricks unfold against me. It was very clear to a lot of people in
something
media.
Is coming.
It was very clear to a lot of people in media and PR. He's trying to get out ahead of something. And now we have the receipts that Business Insider reached out to him for comment.
Of course.
And then he tweeted that after it. So he knew this was coming.
Of course he knows.
And so for the people that are like, oh... just when Elon starts speaking out, they're going to try to trash him with this. That's not what happened at all. And this is actually kind of genius where he's made it now. Having someone be accused of like sexual assault and be in this situation should not be a political issue or a political thing, but he's made it one. And now you have like Ben Shapiro, Tucker Carlson, these guys like rallying behind him saying, oh, we're going to defend him against like the fake news media, all this shit. He's made it like a political issue. So now it's not just like, oh, are you...
Right, it's a political issue, and also it shouldn't be a stock market issue as well, and yet it is, because again, he's more to this company than his title. He is everything. I mean, the technology is there, the production is still there. That's the silver lining. But yeah, I mean, if Elon, if Elon steps aside and is no longer running Tesla day to day, I'm going to go ahead and say the day that gets announced, Tesla falls by 25%. I'm going to say it.
25, yeah, that'd be a big drop. I would buy it there probably.
It will be huge. I'm going to say it because he's a cult of personality and this is a cult stock.
Yeah, and so when I said the other day that, or I think maybe even yesterday, that he's been the worst Fortune 500 CEO over the past couple months, like I was talking about how I don't want leaders of a company I'm invested in to be alienating potential customers, to be this divisive, to be this polarizing. That's not your job. You don't see Tim Cook going out making political statements that will alienate half of Apple's customers. You don't see, remind me, Microsoft CEO's name?
Satya Nadella?
Nadella. You don't see Nadella making, statements like that. You don't see.
Yeah, well, it says no one quite has the balls that Elon has. So he's the
call it what you want. Balls. I don't think it's that
gumption. I don't know what.
I don't think it's that. I think so. you have Tim Cook. He's worried about Apple.
Yeah.
Nadella, he's worried about Microsoft. Lisa Su, she's worried about AMD.
I think so.
Elon Musk, he's worried about Elon.
You're right.
He does not have Tesla's best interests in mind when he's doing these things. He has Elon's best interests in mind. Why would I want to be invested in a guy that's running a company like that?
Now it all
Because
makes sense.
it'd be so easy for him to hold these thoughts about
like keep him in his brain.
yeah, and just put his ego aside and say, hey, even if I think this, even if I know this tweet will pop off and get 1 million likes, maybe this isn't the best for Tesla and the future of Tesla.
Wow. Now we all see why you just called your broker, your advisor 10,000 times to sell Tesla. It's clear. It's clear to me now.
Disney, I agree. I don't think
Chapek,
that was
Bob
probably
Chapek.
not the smartest move to get politically involved in that.
Yeah.
I mean,
Yeah. I mean, you're right. I mean, business always, no, not always, but business like historically has tried to stay away from politics, and obviously politics has like seeped into our lives, which I hate. I think we all hate it, but
yeah, and we have that kind of woke capitalism where like all these companies they're gonna change their logo on Twitter to like a LGBTQ thing,
yes.
as if like or like tweet like
As
end
if that-
racism as if like it does anything, and it
Yeah.
is like annoying.
my favorite thing is when when you get like a Happy Pride Month and then they like contribute to some like anti-abortion or anti-LGBT cause
exactly.
or charity or
but I think the
it's like,
other
yes, that makes perfect sense.
I think the other thing too, and this can hopefully put a bow on the Elon
we
Tesla
can move
situation,
on from
because
this.
I
Thank
don't
God.
know how much we can talk about this.
I
dude.
can't do it anymore.
I know.
anymore.
I don't want to either.
You're
But
killing me.
I really do feel like the overall sentiment has been shifting with Elon. Maybe not, with his staunchest, most diehard fans, but just in terms of like a moderate, especially younger people. Like, it's my bias, but I talk to more younger people.
Really?
One of my best friends is he's pretty conservative. Votes Republican. We disagree on some stuff politically. We have good arguments, but he's one of my best friends, and I don't. And even he was like sending me some of Elon's tweets last night, just being like, what the fuck is this guy doing? Like, what is he saying? And I think that, if you asked, like, if you polled a bunch of 25-year-olds 3 years ago, they'd, I think they would have a more favorable opinion of Elon than right now. I think a lot of people that aren't on his, like, super staunch, diehard fans have just like kind of gotten sick of him.
Yeah, I'm sick of him. I don't even hate him, and I'm sick of him.
Yeah.
It's making me hate him.
And I want to make that clear, too. I don't hate Elon either. I just don't think he's doing a good job running Tesla. Like, he tweeted today he's in Brazil launching Starlink to, like, thousands of schools in Brazil that, like, don't have internet. That's fantastic.
Yeah, do more of that.
Do more of that.
Do less of the flight attendants.
Do less of the flight attendants.
Yeah.
The weirdest thing, too, last Elon thing, not even, like, obviously the sexual assault allegations serious.
Yeah.
Like, there's a victim there. It shouldn't be just about like talking about money and Elon. Like, keep that in mind. But the weirdest thing when you read the article, SpaceX was requiring their flight attendants to get masseuse licenses.
I read that. I also have to confess that prior to last night, I didn't even know that SpaceX needed flight attendants.
Yeah, private planes always have like a crew.
Right. No, but I assumed it was like a contract. Like you hire like a third party.
Like they don't have like SpaceX flight attendants.
Yeah.
Like, how fucking weird is that?
It's a little weird.
A little weird.
All right. Okay. Let's move on here. So, what has been the story of Wall Street in the past few days? On the downside, it's been retail getting hammered, right? Target, Walmart, crushed, game over. But on the upside, what's been holding up okay, right? A lot of the crap is a strong word. Sorry, I take that back. A lot of the really beaten down stocks like Roblox, stocks like SoFi, stocks like look at Coinbase the past few days. These stocks have had really good weeks. Well, what are they doing today? Nothing great. There was a place to hide there, and it's coming off now. Let me pull up some charts for you, show you what I'm talking about. Okay, look at Roblox now. This is let's go to a daily chart. This is a COVID stock, a sexy play, a growth name that got all the way up to $141.
More than a COVID play, it's a metaverse play.
Metaverse play got all the way to 141, came all the way down from 141 to $21. And look what happened this week. It went from a low of where were we last week? We were at 21. Yesterday we got to 35. From 21 to 35 in a week. But today we are down 10%. This has been your relative safety play. This has been your one and only pretty much place to hide this week in stocks like Roblox and stocks like Coinbase, right? And they're coming off a little bit today. Does this mean this is the end of this trade? I would personally, if it were me and I was in any of these things for short-term trades, which I am not, I would find a level to lean on and get myself out if we cross below that support. So in Coinbase's case, you have a low from what was the 18th? That was Wednesday. A low from Wednesday at $61. A low from Monday at $60.50. If we got down to like $60, I would get the heck out of Coinbase if it were me. If I was long for like a short-term thing, $60 is my support. You fall through that, get out. Same goes for all these stocks, right? SoFi, you guys know I'm long SoFi from way higher price. Look at this thing. This thing just went from $4, and how high did we get today? This thing just doubled. SoFi just doubled in 2 weeks, okay? These moves happen all the time in beaten down stocks, but they almost never last.
Holy shit! Talk about not lasting. Okay, Upstart down 18% today.
Upstart, great example. Maybe that's the what's the word I'm looking for? Okay, Behringer. All right, that's a word. Maybe that's like the Exhibit A. I don't know what word I'm looking for there. But Upstart is Exhibit A of this trend, okay? Because look at Upstart, okay? May 12th, the stock was $26. Yesterday, it was $54. The stock just doubled in 2 weeks. When that happens to you, you got to know when to take the money and run. And what do we say? Wait for that first red day. Here it is. Here's the first big red day, right? So you can either find a level to lean on, or it's your first red day, I'm done. Call it a day. Call it a trade. Harbinger. That's the word.
Yeah, not Behringer.
Not Behringer. Harbinger.
I right when I said it, I was like, that's not the right word. I searched archetype synonyms to try to find it.
No, thank you, lighten up.
I don't know what Behringer is.
There are our new bosses. Affirm, another example, okay? Again, the first big red candle here. I would either find some support, some in Affirm's case, it's relatively easy to find, right? You can just say, what's that low? 23.38. What's that low? 23.78. What's that low? 22.82. So basically $22, right?
But isn't there an argument to be made that some of these growth stocks can do well in like a recessionary time?
Dude, like you gotta, if you're in growth, you gotta not look at you gotta have zero expectations for this year and for next year.
No, okay, but hear me out. I'm saying if we go full recession.
Okay.
Your return.
You never go full recession, all right.
Your return for owning like some like value stocks, whether it's like oil and gas companies, Walmart's, your, all those defensive names, your consumers, like it goes. Your returns aren't going to be good as when the economy is booming. So if your ROI is already going to be lower on these value names, then it makes these growth names more attractive.
Okay, that's one way of thinking about it.
Oh no, this isn't like I didn't come up with this theory. I'll read you some. Let's go from. I got to accept cookies from J.P. Morgan.
Don't wait. What happens if you don't accept the cookies?
I have never.
Don't accept the cookies.
Wait, no, then they'll kick you out.
No,
right?
they don't.
No, they don't.
I don't think so.
I accept all cookies at all times.
Okay.
Track anything you want. Like I have nothing.
Nothing to hide.
Nothing to hide. If anything, I want my ads to be targeted toward me.
Relevancy.
Yeah, I want Yeah.
All right. Anyway, what does JP Morgan say?
Well, here I'll just share my screen. We'll do a group reading together. What does Tesla down now.
Yeah,
9%.
it's making a new low of the day right now as we speak. So
Now I feel vindicated for selling.
good job, man.
I wish I would have sold this morning, like before the market opened, but it is what it is.
Yeah, this is the qualms of having an advisor.
Yeah.
Wait, before you share, okay, screw
What?
it. No, I was just
Before what?
I was gonna say I don't even know. Like these banks are pretty anal about share, but this is public. This is on their.
Oh, this is just a website.
All right. Okay.
I mean,
Okay. Just share it.
asset man. I don't know. Like,
Okay.
if
It's public. It's out there.
if we get docked for this, then you know what? I do have some like not public equity research.
This is if it's public, it's fair game. Let's
All
do
right,
it.
so let's read from the top.
Okay.
Michael Bell. I don't know who that is, but if that's him, he looks like an upstanding individual. He looks like a guy during 07, 08 that would not sell you a subprime mortgage.
What does that have to do with anything?
He's like a good finance. I don't know. I just watched margin call last night, so I'm only thinking about like 07, 08. All right. This recession will be a very good test of whether some technology and online business models are really as defensive as the market currently believes. All right, so this whole thing is. Oh wait, this is from 2020. All right, maybe this is.
Oh, Jesus.
All right, well they were right.
Oh my goodness.
That downturn and wait, when this was like pre-COVID. What recession were they talking about? I don't know.
Dude, it just goes to show.
All right, I'll do some more research on this.
Somebody somewhere is always predicting a recession. The difference is this time there's more of them and they're louder. All right, we'll talk about that. Talk about that some other time.
I think it's an interesting theory. I'll do some more research on it.
Do
But
some more.
that's what they were asserting in that basically was that like, hey, returns aren't going to be as great on some of these boring names, so that makes these sexy names even sexier.
Okay.
Or it's like if you're not getting returns from anywhere in the market, you might as well like invest in companies that you hope to get returns from years down the road.
It's true. It's true. All right, we're gonna have Tim Quast hop on in like a minute or two. Market structure edge. You know what? I really want Tim's thoughts on. Well, not his thoughts per se. I want his data and his research on Tesla. I want to see what the market is doing. What is the supply and demand of Tesla right now? You know what? Let's ask Tim when he comes on how he would quantify retail exhaustion. That's a good question.
That's a great question for Tim.
It is a great question for Tim. So Tim Quast, who also was on CNBC this morning.
Really?
He was cheating on us.
Hell yeah, Tim.
Hell yeah, he was cheating on us.
But I love Tim. He's a
All
smart
right.
guy.
He was
and he deserves to. CNBC, the fine folk that watch CNBC deserve Tim's insights as well.
All right.
Not everyone can be so lucky to tune in to.
We'll have to ask him.
Benzinga.
We'll have to ask him about that. All right. What else? At some point today, I do want to talk about next week's earnings because there are probably about a dozen important reports. We're basically through the earnings season. Next week is basically like the last hurrah of earnings. There is, again, like a dozen or so interesting reports to discuss, and then that'll be it, really. And then we'll no more earnings until July, middle of July. So I wanted to get there at some point. I wanted to talk about margin call, which you watched last night at some point.
Yeah, I was thinking about that too. I also didn't know. I guess I didn't know how recent. It's not really that recent. Like the movie came out in 2011.
Yeah,
I didn't
holds
know.
up very well.
Yeah,
like doesn't age technologically.
I still do have to watch Big Short, but I'm going to read the book first.
Do you expect me to lend you the book?
No, I'm going to the library this
Oh,
weekend.
the library! He's going to the library?
Yeah, look, I have my Royal Oak Public Library card right here.
Oh my goodness! I've been to a library and
It's actually insanely nice.
I've not been to a library in the state of Michigan. I should.
Oh yeah, Demi Moore was the head of risk management. That was the other thing. Like Margin Call did a very good job like diversifying the cast. Like there were a lot like in the opening scenes of Margin Call, the two women like come in and like start firing people and stuff. And I was like, they're doing it. It's like 50-50, like women, men. Like I don't think Wall Street's really like that.
I don't know, man. All right. Our second guest of the day is here, Tim Quast. He runs the amazing site Market Structure Edge, marketstructureedge.com. We love him. Comes on our show and shares his insights and knowledge with us and what stocks have underlying demand and what stocks have a lack thereof. See what he says for us. Mr. Quast, did you say there was a blizzard? Is that what you said?
I don't know if you can see out behind me there, but it is snowing hard, and
Whoa!
there's about 6 inches of snow. It was
I heard about the Colorado weather. It was going from like 80 to 30. You guys have had a pretty crazy week or so, right?
it's like the stock market. It was 87 degrees in Denver yesterday, and it was 20 degrees coming over Rabbit Ears Pass this morning in here to Steamboat. We're just up for a few days. Yeah.
Wow.
What? Yeah,
How unusual was that for Steamboat in May?
Not really that unusual. We fully expect a pretty good storm in May. It usually hits on Mother's Day weekend. I mean, so when we got past that, we thought, oh, we're in the clear. And then we got this. But 2 years ago, on June 22nd, first day of summer, we had 13 inches of snow here in Steamboat.
Dude,
so you just
what?
never know.
Yeah. Are there any?
Can you imagine living there? Why would anyone want to live there?
A Basin
fabulous.
is the mountain that stays open the latest, right? Is it still open?
It's yes. I saw some folks with skis on the car.
Oh my
roar
gosh.
past me.
Going toward A Basin.
Oh my gosh.
Day Basin, yeah.
Can't
Wow.
even.
All right, Tim. Before we
This doesn't
get
help traders, does it?
No, this is
talking
not.
about snow is of no use.
well, I don't know if anything can help traders right now, but we'll try.
We tried it.
Oh yes. Oh.
I know.
yes.
I'm kidding, Tim. But before we get going on
can
checking
help.
out some stocks on Market Structure Edge and looking at that sentiment, Spencer, I had a quick question.
Sure.
Just on if you wanted to look at when retail investing, like the overall flow, was getting exhausted versus, okay, retail investors are buying the dip hard right now versus, oh, the buying's slowing. What data would you look at to find that?
We look at the parties that buy retail flow. So the great bulk of retail orders, on the order of 98% of retail orders are consumed by folks like Citadel and Virtu and Wolverine and G1X, which is a unit of Susquehanna, and Two Sigma is in that business. UBS has an operation, Jane Street. So we can track that the activity being driven by those firms and at least get a reasonable read on where those things fluctuate and in which stocks.
And to be clear, that data is not necessarily public information, but it is incorporated into your platform, right?
It is public information that we buy. So we buy best execution data. So everybody who is a broker dealer is required to comply with the best execution rules. Yeah. That's it. The SEC loves jargon terms, but what it means is you're supposed to handle customer orders or any orders within the price bands of the marketplace. So that's how we look at that data. Then we apply statistical sampling to it and other things, but we can get a pretty good look at it.
Okay. So yeah, the rub is there. It is public. You just got to pay for it, and people like Tim do pay for it. Put some pixie dust on top of it, and then display that in their platforms, right? So okay, you would look at how much order flow is a firm like Citadel receiving compared to this point last year, and there's clearly a lot less activity. There a lot less flow coming their way, which tells you, oh man, there's a lot less buying coming from the end retail brokerages.
Exactly.
Yep. Cool.
Yep. That's exactly how it works.
Let's look at some individual stocks here. I would love to ask you to show us Tesla if you can, because what we always ask you on this show, and the main reason is obviously we want to hear your dulcet tones and know how your life is, but it's also to show us what's on your platform, because what your platform does for those people that don't know is it looks like within the market structure and where buyers come from and where sellers come from in terms of all the different types of people that occupy Wall Street, and what that does for demand and what that does for supply, and what those two things in turn do to a stock price. So you have it up on the screen right now. We've got Tesla. Before we even really get down into it here, tell us what Like, because we haven't actually done this in a long time. Tell us what these charts actually show and how we should read them.
Okay. Yep. And so there are two graphs here. The top graph, it shows you in green a measure we call demand. It's an algorithm that more formally is what we call market structure sentiment. And what it does is take the 4 big reasons that people buy and sell. In the market, there's not one motivation. Think about this, traders. We trade, then you have money that is long-term investing. You have passive vehicles that are allocating assets and making commitments to the market, or they have redemptions. You have derivatives. So today is an options expirations date, as was yesterday.
We forgot to mention that. Yes, yeah. OPEX, yep. Third Friday of May. Thank you.
And I was on CNBC this morning at 3:35 Mountain Time.
I saw you. I saw you.
Talk about options expirations and the effect, right? So those are big deals. And the way to think about this, traders, is that investors and traders buy story. So what makes a company unique? What makes NVIDIA better? They buy characteristics. That's what BlackRock, Vanguard, and State Street are going to do with their indexes and ETFs. They buy price. That's what Citadel does. Citadel buys price, and they're 55% of the market. They're paid by exchanges to set the bid and the offer so that the exchanges capture valuable data and they sell it back to people like me and the brokers and so on. And then there are derivatives and how those derivatives are connected to equities. All of that feeds into this green thing that tells us on a 10-point scale, is demand rising or falling? Is demand above 5, meaning there's excess demand? Is it below 5, meaning there's not enough demand to keep lifting price? And so you can see what's happening. And this is price, closing price for Tesla versus its demand. If that demand stays below 5, price falls. Then this is what we call supply. And it is also a rules-driven read called short volume, not short interest. People talk about short interest all the time, but short interest is a 1974. How many of you were even born in 1974? In 1974, the Fed created a rule that became short interest, and it hasn't changed since. That's almost useless in the 100% electronic, 95% algorithmic market that we have today. So we use a measure that was developed in 2009 by the SEC. Said we are going to re-implement a modified uptick rule, meaning under certain circumstances, you can only short when stocks are ticking up, then you short. There are only certain circumstances. And then FINRA created that data set, and exchanges sell it as well, but that is supply. And it's almost half of all market volume. So let's look at what we know about Tesla just by looking at supply and demand. Demand is very weak, and it's at 1. Supply is trending up and is at 53% of all Tesla trading volume. And Tesla trades a lot. It trades $20 billion of stock every day, and 53% of that is borrowed. Well, it's very difficult for price to rise consistently when those conditions exist. It can be different right at options expirations, but that's what you always want to look at. If someone says, I've got a great stock for you, look it up and see what the supply-demand equation is, because you don't want to own things that look like this, not at this point. You want to own things that perhaps look more like, I'll just give you one that I like. I don't like to trade stocks during options expirations, and I don't care what this stock is doing today. I look at the supply-demand balance. So here's a great supply-demand balance. See that demand is rising and supply is falling. The likelihood mathematically that stock rises is very high. Options expirations diminish it some. They create a risk that we can't see because they're like a black hole, because new options trade Monday. It's not just today, but then Monday, everything resets. Will the demand be the same? Will demand plunge? Will prices increase? Yeah. You have to think about that. But that's how to think about supply and demand. It's a very simple concept that can help you improve your probabilities.
I got to ask you to look at Target or Walmart here. Okay. I'm so curious to see what these things say.
So Target, it's interesting with Target. You will see this dramatic, that's the price, of course.
Yeah.
Look, the price moved the exact inverse correlation with supply. Short volume went from 44 to 62% in 3 days. That's massive supply, not nearly enough demand, and it got crushed. And that could we have known? I don't know. I mean, it looked okay. The demand side was terrible. Supply side was fine, but it can change so fast at options expirations because it's synthetic, meaning
Right.
it is not actual. I don't have to find stock. I just buy a basket of puts, and all of a sudden the short volume is up in one day by almost 50%. That's why it got crushed. Okay, then we want to look at Walmart.
Well, that's the market structure reason why, like that's the technical reason why the stock went down. Right.
And you could say, well, and here's the thing, Spencer, that I find head scratching. If I'm a sell side analyst covering Target, and I know that inflation is through the roof, and that the purchasing power of the demographic that goes to Target has clearly been hit, and their supply chain has been affected, and they haven't passed all those costs on yet. What would I expect? I would expect slowing sales, narrowing margins, lower guidance, and missed targets on the top and bottom line. So why was everyone surprised? I don't understand. That's why I don't think that's the right explanation. I think it was a big short bet that occurred before the market opened by the people who can do that. And that principally involves hedge funds and ETFs. I could trade a whole basket of ETFs for a bunch of Target and short it and buy puts on it. And
wait. But the stock clearly did go down. Both these stocks clearly went down when the earnings came out after hours. So,
but you shouldn't report that Target. Don't report earnings during options expirations. You are just serving up to arbitrageurs and speculators a soft pitch.
Okay, so maybe that's partly an explanation why the move down is as big as it has been, and maybe it wouldn't have been as bad if this were last week or next week.
Exactly.
Okay, I think I'm with you there. Wait, good question from Lighten Up in the chat. If we can just back the truck up for a second. How would Tim separate consumer and industrial flow? This is going back to the conversation about the order flow thing. How would you separate the flow? Since Citadel controls 98% of it, flow is a ratio. You need to know the components. Good question from Lighten Up.
Well, if I understand what you're asking, Lighten Up, that's a good handle. I like that. I mean, we're going to cluster stocks by their sector. It's one of many ways we look at it. So if we want to look at consumer discretionary, 400 components, consumer staples.
Well, no, I think he's referring to like the retail flow versus like the institutional flow. Yeah.
Retail versus institutional.
Yeah.
So we use algorithms to do that. That's and it is a great question because it gets to the very heart of the way that the stock market works today. So I will say simply that we look at how order flow complies with the rules, by which I mean, does it race through the market trying to set the price? Well, that's going to be what we call fast trading. Does it cluster within the averages near midpoint? Well, that tends much more to be money following a benchmark. Does it hang out at one market like the NYSE and try to build a position? That's also measurable. That would be active value behavior. I want to get as much as possible at the best possible price. So we apply those mathematics to it. However, and this is the reason your question is good, because it informs something that people don't understand. Ultimately, how Citadel handles that order flow will reflect the preponderance of what the order flow is comprised of. And so, for instance, I'll give you, maybe we use Morgan Stanley as an example. Morgan Stanley is an authorized participant for ETFs. They're one of the largest prime brokers in the world. They're a major execution force behind customer orders, one of the top 4 or 5 in the market. And so whatever they've got, so maybe I'm a stock picker and I want to buy NVIDIA. Well, my NVIDIA order is still going to get blended in with all the passive order flow because that is the prevailing behavior. That's what people don't realize. The analogy I would use is like you're in a hurry to get downtown in New York City and a bunch of other people are not, yet everybody gets on the same subway. Right? You're not going to get there. You may be in a hurry, but you're not going to get there faster than the subway. And the same principle applies. Plus, there are only 9 firms now in the entire, out of 4,100 brokers that FINRA regulates, 9 of them are executing over 90% of customer orders in the marketplace. That is It's not a machine. Citadel oftentimes is a proprietary trader. Once they buy retail order flow, that is no longer a customer order. It's their order.
Yeah.
And they can do what they want with it. And
Yeah.
it becomes a proprietary trade. So a great question, because it gets to some weedy elements of market structure, but they're important things to understand.
This whole thing, it's interesting and yet mind-numbingly complicated at the same time, and makes my brain hurt. Robert Carniel asked if you could look at Merck for him. MRK.
Yeah, which has clearly been on a tear. Right? I mean, it's just, Merck is at, may not be at all-time highs, but it's certainly been an extraordinary performer.
Yeah.
And there you go, Robert. See how it's spending all its time above 5. It's not dropped below 5 in 30 trading days, and the supply side continues to trend down. It's actually below 30%, which we consider a deal threshold level. Might mean that people are speculating that they're going to buy something, and I would too. If you have a currency that is appreciated so greatly in a market with all these discounts, I'd be looking around for something to buy too. But that is clearly why it has done so well. Excess demand, insufficient supply, price rises.
All right. Tim Quast has been on with us. He runs MarketStructureEdge.com. He joins us on Pre-Market Prep every single Monday, 8:35 a.m. Eastern Time, right here, youtube.com/Benzinga. Tim, I guess stay warm. I mean, it's 85 degrees here, but stay warm where you are apparently, and stay
High
safe.
Of 40. Oh, thank you guys. Well, enjoy your warmth, and
all right,
Spencer, enjoy your weekend. AB, good to see you too.
All right,
we'll catch you Monday.
You as well, Tim. Always great to have you on.
Good to see Tim. Can't believe I had to tell someone to stay warm. It's freaking May 20th, but that's how it goes. All right. That was a great conversation. We're going to have Tony Benson from Patterns in the Flash stop by in a couple minutes and spend some time going through chart patterns that he's watching, that he's trading. We'll take questions from the chat. If you're a patterns guy or if you like patterns, Tony's your guy for that. And it just goes to show there's 10,000 different perspectives here. There's 10,000 right answers. 10,000 different ways to approach the market. You can approach it from Tim's point of view. You can approach it from Tony's point of view. You can approach it from someone else's point of view. There is no right way. The right way is the way that works for you. That's the right way. The right way to trade is the way that works for you. So however that is, all we can do is provide different voices and different perspectives on the market. Do I dare ask you how low we've gone in the last few minutes while I was distracted talking to Tim? Do I even dare bring up the SPY on my screen? Okay, well, yeah, we kept on going down. 382. 382 in the SPY. Got to go to a weekly. Here.
I did want to. We do have to get to Tony.
Yeah.
I did want to take a second to look at Volkswagen though, because after we mentioned it earlier, I was looking at it and it does look pretty interesting.
VLKAF.
Well, there's two tickers, right? VWAGgy and then that one.
Oh, VWAGgy. Yeah, but what has the volume? VWAGgy's got. This is what you do. VWAGgy's got.
Volume, it looks like
a couple million shares trade per day. And VLKAF has a couple thousand. So let's go with VWAGgy.
Oh, VWAGgy. All right.
VWAGgy.
So if you go to the overview, I mean, it looks very cheap. Price to sales of.
Let's check it out. Forward PE of 5.
Yeah.
Yeah.
Price to sales.
Dirt cheap. Right. Price to sales 0.3.
Yeah.
Wow. That's incredible.
I know.
EV to EBITDA 3.9. That's good. Yeah, I mean,
and this could be one of those
cheap.
like that you could make an argument that this could be a value and growth play wrapped up into one. Well, I don't know. Are they profitable? Are they like bringing in money right now?
I don't know. It really like
they're spending a bunch of money on the EV expansion. But Volkswagen owns Electrify America, which is Tesla's biggest competitor in terms of like the charging stations. And Electrify America actually has had some pretty impressive growth. So I will be adding some Volkswagen here. Maybe that's what I'll
Wow,
do. Maybe that's what I'll do with
he's doing the old pair trade. He's selling Tesla to buy a Volkswagen. Wow. All right. Not the worst idea. All right, let's bring on Tony Benson. Patterns in a Flash is the name of his site, and he's here with us. And Tony, share your screen for us and see what you got. Tony, it's been a hot minute since you and I got the chance to catch up. How you been?
I am good. How about you?
Doing well, doing well. How have you been faring these past few weeks?
Spectacular.
Oh, that's great to hear.
Really?
Hey, I'm on the downside, so when it's tanking like this, it's a good day.
All right, what
Are you still shorting? Still bearish?
Yeah, puts.
Oh yeah.
And I trade mostly options. Day trading I do stocks, but swing trades I'm pretty much purely options. So.
What have you been? Walk us through the past, since I haven't spoken to you in a couple weeks now. What have you been trading the past few weeks?
Well, just the last week or so, been loading up on some oil stuff because there's a nice little triple top on CVX. Easy to see on a line chart. So I got it a little bit early, but I then peeled it back a little bit, and then when it popped the other day, I loaded back up on it. So right now it is down. So I'm happy with this one. COP is another one. I got 3 oils. COP, same thing. We got a triple top going with that. And then Halliburton is little head and shoulders on Halliburton. So, and there's still some room. That's one reason I still like these. I think there's still lots of room to the downside. So we'll see.
So wait, walk us through the setups here and how you and your entries and your targets and all that.
So start with my favorite, obviously, as you know, head and shoulders.
Yeah, I know you love the dandruff.
Yeah. So what's that?
I said you love the dandruff, head and
Head and
shoulders.
Shoulders shampoo.
The shampoo.
Oh, yeah.
Troy Polamalu.
Yeah.
Yeah. So left shoulder, head, right shoulder. Then the measured move is 680, basically. So looking for it to break the neckline, which already did. So I actually set this plan up when it was down here. I maybe should adjust it a little bit. So I've got the red line, the green line, and the orange line are the stop. The red's the stop, the green line's the target, and then the orange line is where my entry point is. It's all planned based on 3-to-1 risk-reward ratio. So make sure that my risk-reward ratio is in good shape. So in fact, I'm going to adapt that right there. Pull the stop up to just there above 36. And then I'm going to leave the target right there where it's at, because that's our measured move. And it might take a month or two to get there. And the tricky part with oil is that I don't think it's going to really tank. I don't think it's going to get hammered like a lot of other stuff. I think it's going to probably go sideways for a while. So I'm being a little bit cautious with this, more than normal, at least lately, with the way things have been tanking. So I will be jockeying in and out of it a lot more than I normally do. So.
Wait, so explain that to me a little bit. So you're bearish here. You're betting on downside. You have a clear downside target of what, 20? What does that say? 28.61.
Yeah.
But you said in the meantime you'll be jockeying in and out. What does that mean?
Well, in other words, scaling is another way to put it. That's usually how I refer to it. But
okay. Right. So yeah. So just walk us through that. So walk us through the behavior there. You have a downside target. And in the meantime, you are gonna be buying. I guess you'll be selling into green candles, and that's how you scale into your short.
Yeah, well, I'll use this just as an example. This is what I did with all 3 oils. Is this? I think it was this day, if I remember right. Let me zoom it way in so you can see it better. I think it was that day right there that I loaded up on some puts. We got a decent sized position. The next day it was good, but then the following day it popped up, so I unloaded some of them. I got out of about half the position. I left a little bit there just in case it did drop, right? Which is, for me, it's an emotional management thing, managing my emotions, because if I leave the whole position there and it keeps going against me, I'm freaking out, right? Yeah. Now you're way upside down. If I clear half of it out, take a small loss on half, and it keeps going against me, it doesn't hurt as bad, which is exactly what happened. So then this day comes, and the next day it gaps up, hits that old resistance, and I reloaded the position. So I got an even better price. I think I paid around $5 for the options here for the puts. I got out of half of it I took a 50 or 60 cent hit on it, and then I reloaded them here like $3, so I got a lot better price. And then this day when it tanked, I was extremely happy. Closed out some of them for a profit, left part of the position there. Yesterday it gaps down. I got out of a little bit more there, and then it rallied by the end of the day. Towards the end of the day, I reloaded them back in, and so now I've got an even bigger position because I've got a little bit of profit there, so I've got some cushion. And then today, of course, it gaps up this morning. I was a little bit freaking out because I got a big position on there now, but now that it's dropping again, I'm happy. And I've got an order out here to sell some of it as it drops, and then more, and then if it continues to fall, I'll still have a position there. So does that make sense?
That's a nice little behavioral trick to manage your own emotions.
That's exactly why, because that's the trickiest part to trading is keeping your head straight. So
right. All right. So this is that's a pretty detailed look at Halliburton right there, and that setup there. And so Tony's betting on some near-term downside. I would imagine you could do the same thing with any other oil stock. Yeah. Anything besides oil though that you've been looking at?
Yeah. I know somebody in the chat put in Merck. Merck's actually bullish right now.
Yeah. Oh yeah. Yeah. No kidding.
Where did it go? I thought it was on the list here somewhere. I guess not. So yeah, this was broke out to an all-time high, and just
yeah.
Well, you can see that. Oh, you
healthcare. People need healthcare, even in a recession. They still need healthcare.
Yeah, don't let me forget. Aaron said something this morning that caught my attention about 1920. First he said 22, then corrected to 23, and I pulled up some charts. And I thought that was interesting.
I was wrong. It was 23. So apologies for being a year off. But
off by a year. Off by a year.
And it's interesting. I didn't know until probably 8 or 10 years ago there was 2 depressions in the 20s, and one was, I think it was 22 or 23.
Yeah, that's when that had to have been. I did think I knew that, like in the back of my head, but it's easy to forget about that recession in light of the Great Depression.
Yeah. So Merck was one. This is another one that I don't know how I just got lucky on this one. It just happened to peg it, and I didn't take as big a position as I wanted because the overall market conditions getting bullish on anything a little bit skittish, but the pattern's beautiful. We got a little bit kind of a flag pattern. It's not necessarily a textbook, but so there was the trading plan. I figured if it broke out of that high of basically 89, put a stop just below it, and then a target up there of 98, which is based on the flag, which is a little bit. This is probably a little bigger than it needs. I don't think I even went that far actually. I don't remember exactly where I put it, but somebody put the target at 98.
All right. What else we got? What's on the list there? Yeah, we got a lot of stuff. That's a lot of tickers on there on the left-hand side for you. I'm not used to seeing that many. I feel like I'm seeing.
Yeah, usually between 20 and 30. Got 37 this week. So
yeah, I'm seeing some tickers that I would expect to see out of you, and some tickers that I really am surprised to see there. I'm seeing like what jumps out to me here? Wells Fargo is interesting. Roblox. Talk about that. Wait, walk us through Roblox here. I just had a bit of a rant on Roblox.
Yep. Actually bullish. Right? It was looking bullish. It's a little tiny miniature inverted head and shoulders, which I usually don't put a lot of stock in if they're really small like that. Typically, especially the price patterns take longer to form. But I figured if it broke out of this $35 level, there's room to run up to about 46. But obviously, if the market would have continued to rally today, then this would be something I would have considered getting long on, at least for a very short-term trade. But it's not, obviously, and it's tanking. So
yeah,
it was a potential, and that one and Pinterest was even better looking actually. I think because we've got a nice little double bottom there. But this is one thing, and the only thing that caught my attention on these, and the only reason I was actually considering, which I'm not yet, but I still will, is, and this is not something, as you notice, I don't do indicators much.
Right, I've noticed that. Yeah,
really, the only thing I look at for the most part, I mean, I'll look at a few, just glance at them. But if there's divergence on MACD, then that can be a big signal. And the first time I learned it was when the 2000 crash happened and Juniper tanked. I looked back historically, and there was a major bearish divergence on Juniper, and it went from, 200 down to 80, something like that in 3 weeks or something. So that was back in the 2000 crash.
Wow.
So I learned then that it can be a very powerful indicator. And right now you can see that the trend in MACD is higher, even though the price has been going lower. So there may be some, if the market conditions get better and the market stabilizes a little bit, then Pinterest may have some upside. Same thing with Roblox. There's a little bit of bullish divergence here with MACD on Roblox too. So considering a possible bullish trade on this if the market conditions change a little bit.
I mean, I'm rooting for it, Tony, but I gotta say,
You have this one, right?
think this is an uphill battle for you. No, this is an uphill battle. This is gonna be an uphill battle.
Yeah.
Yeah.
It's one reason. If I do this, it'd be short term, just like oil. I mean, even if things tank on oil today, I'll be closing out. If it continues to fall like it has been, I'll close out a decent sized portion of my trades today. At least probably half of them. So
okay, that's probably for the best. Xbox Gaming in the chat. Do you think Tesla is a buy yet? Let's get what the hell? Let's ask everyone. Let's ask everyone today what they're thinking about Tesla. We should have asked our first guest about Tesla.
Well, yeah, I looked at it too when you guys were talking about that. I remember seeing this, and there's not any significant support till about 560.
Yeah, it's the level that Spencer pointed out earlier.
Hey, we're on the same page there.
I know, but I said that I would want to wait and see. Like, it doesn't look like that. Well, I guess there's 2 points there at 560. I don't know. We'll see.
Yeah, there's the next level from there is 445 essentially. You know, I'm curious.
445. Holy crap! Can you even imagine? Can you imagine Tesla, which the stock was $1,000 not that long ago? Imagine it at 445. Oh my god.
There's a lot of rhythmic chart which I've never looked at.
I guess, I mean, Tony, is there? I don't know. You know, I guess this is my question about technical analysis here. But if we move down from 1,200 to 560, right? That's a big bearish move. 50% drawdown. It's in an ugly downtrend. Like, at that point, is this 560 support level going to be enough to change sentiment? Like, I don't know.
Hard to say. It's really hard to say. That's what's tricky about it. From a technical perspective, the only way to really know is to have it hold the line and give some kind of pattern, some kind of indication that it's not going to break down. And there's never a guarantee. But I mean, this is not a bad example here, where you can see, if you look back historically. Well, this is 2020. It broke out to the north, and then when it came back down, it held this line 560 twice before it rallied. So I would expect, at least in the short term, to dig in here. But this type of action, and I know a lot of people are looking for the bottom right now, especially this type of action where we came down and basically hit it 3 times. I'm sure we can get candles. I mean, we dug in here and tested it several times. The more times it hits a support line without breaking, obviously the more solid it is. The more times it's been there. So that's one just basic rule for technical analysis, is the more times it tests a support or resistance level, the more significant that level becomes, right? Right. So if it digs in at 560 and bounces and holds it, I would look for it to do at least 2, if not 3 or 4 bounces, especially if the market continues to stay bearish. I wouldn't touch Tesla until, I mean, maybe for a short-term trade. But if you're talking longer term,
what's that level over to the left? The high. Sorry, I'm trying to figure out how to describe this. Like, keep moving the cursor over the left a little bit.
Here?
Yeah, right there. What's that level?
About 880, it looks like.
So if we do come up and clear that level, then that'd be an obvious breakout, right?
To the upside?
I'm saying if we got down to 560, bounced, like markets are bullish, and then we get above 880, then it's like, okay, then we have a ways to go, right?
Yeah, a break above that point, yeah, would definitely be a bullish move, but that's a long ways.
A long way. So I don't know. It could be a year before we're talking about that. I don't know.
I'm not. I don't want to say I'm not as hopeful, but I mean the big picture for the economy is not pretty.
All right, so let's ask this. So you've been buying puts and stuff. What will be your signal to if you were gonna flip or say, okay, maybe I'm not as bearish as I was a week ago? Like, what would that signal be for you?
That is a good question, because I know a lot of people are thinking that too, and a lot of people are trying to pick the bottom. And
I'm not. I don't care. I'll wait.
Yeah, I think that's wise.
I'll wait. I'll wait as well. I will. I also choose to wait.
I'm selling here. I'm not even buying.
Well, and this took me a long time to figure out. It wasn't something I learned right away, but because I started in 2000, right at the very peak of the 2000 bubble, and so I had never experienced a crash. I didn't know anything about it. A lot, just like a lot of people are starting to experience now.
Yeah,
I had no clue. And I'm trying to pick the bottom, and because that's what everybody else was doing. All my coaches were telling me, it's going to go up, it's going to bounce, and it didn't for 2 years. this is the '08 crash, and you see the bottom down here. It took from the very last kind of not the capitulation move, but the first big tank was October of '08, and it really didn't break out to the upside until 9 months later. So bottoms, and you can see there's an inverted head and shoulders there. The bottoms typically take at least a few months to put in a major bottom like we had there after '08. It took 8 to 9 months to really put the bottom in before it gave a bullish signal with the inverted head and shoulders. And the 2000 crash was really no different. There's 2000. So that's, it was April 3rd and 4th when I sat in my very first ever workshop, which was literally right there. I started learning about the market.
Wow. What timing?
Yeah. So, this was me trying to trade as a beginner, having no idea what I'm doing. And I blew up my first account, just bought calls on stuff. And, of course, it was very different then. Commissions were $75 a pop.
I know. That's
Wait, you blew up an account, Tony?
Oh, yeah.
Oh, that makes me feel better about myself.
Yeah, if you've traded for at least a decade, then you've blown up at least one account. So at least you should have.
Yeah, I would say in my trading, my biggest weakness is risk management.
That's everyone's biggest weakness.
Yeah.
Maybe.
Or maybe
not
you're
everyone.
just stock picking. Like,
Yeah.
like I think I do fine. I think a lot of times like picking stocks or picking the right movements, it's just like risk, man. It's like if I get 4 options trades right in a row, but then my 5th one is the big one and I miss it and I lose all those gains, then what's the point,
Yeah. The nice part is the major turning points of not only the 2000 crash, but the bottoms as well. As you saw, there was an inverted head and shoulders. Same thing in 2002. Same.
Oh wait, now Happy's giving conflicting information in the chat.
All right. Well, hold on. I just want to say, shout out to Born to Be Free. What's up, Berlin? How we doing, man? I met Berlin in Vegas last weekend, and then he left me to go to a concert.
Oh yeah, some country concert. Luke Bryan. No,
I don't know. He's way more hip to the jive than I am. I have no idea what
was it?
I don't know. But what's up, man? How we
Kenny
doing?
Chesney?
No,
I'm
it
gonna guess
wasn't.
Kenny Chesney.
It wasn't Kenny Chesney. I don't know what it was. Some country thing. Something. I don't know. All right.
Close the market already. Yeah, I'd be down. Like,
No. In all. See, he saw Ice Cube and Snoop. In all seriousness, though, I remember.
Wait, why did I think someone else?
I remember postulating on the idea of like, should they shut the market down in like March 2020 because I was like so freaking terrified. That was my first crash. And unless you count, do you count like 2018 as a crash, Tony? Do you count like 2016 as a crash? I don't really count those as crashes, but like that was my first crash, and then like after like the dust settled, I thought, wait a minute, you don't close the market. You want to preserve liquidity at all costs, right? Closing the market would be a disaster. Look what happened in Russia. Like they closed their market and it is a train wreck over there. I know they got other shit going on, right? But so it's not exactly the highest priority. But like, that's that you do not do that except in extraordinary circumstances. You preserve liquidity at all costs.
Yeah, in Russia, I don't think there's a whole lot of people that the Russian citizens that are invested in their market. If they are, they're not much. Where here, it's a whole different ballgame. I mean, the vast majority of people have some money exposed, whether it's a retirement account or 401k. They're exposed to the market. So, there'd be chaos.
Yeah, it'd be terrible. It'd be terrible. All right, let's do some requests from the chat. Anyone have any tickers for Tony to look at? We got a few more minutes with them, and we'll just hang out here and I'll bring his charts back up, and we can look at some more stocks, and Tony can give you his take.
I'll show you real quick too, if you got just a second before we do that. There's so this is what Aaron inspired me to go look up, and it was really interesting. So there's the 29. So this is the 20s. Basically, the left-hand chart is basically about 1920 up through 1930. You can see the beginning of the 29 crash there.
What? Oh my gosh, that's great. That's great data.
And then the one on the right is current, right? It's the Dow currently. And this is one reason I love patterns. I mean, if you look at these charts and just look at them side by side, you can see, I mean, time frames, the movements are very similar. Because a lot of people ask, well, what about current stuff? It's like, well, this is the 20s, and the chart patterns are the same.
Well, where was their COVID crash?
Exactly. There is no COVID crash.
All right.
So it's very similar. It's kind of
Wait, they actually. I mean, what are we looking at? 1929 here.
So we're looking at the left is the 20s.
Okay,
Yeah,
because I was gonna say you had the
basically
1917, 18 flu. Maybe these things really do just come every 100 years.
All right.
Anyway, I thought that was interesting.
Okay, Dell LV. Yeah, that was interesting. Wants to look at Marvell Technologies, MRVL. And he wants to know, he or she, I don't know what, or they, whatever. Is $50 a good support level?
It's a support level. I don't know if I'd say good. If there's any, that history is not that great. There's definitely some support there, but like I said earlier, it's the number of times it bounces on the support or resistance is what gives it its strength. And there's a little congestion here and a resistance level there. So there's not a whole lot. I would consider this to be a minor support. So there's definitely some support there, but it's not spectacular. The next major point looks to be about, it should be down just a little bit, about 40, 42, somewhere in there.
Looks like Tesla's making new lows of the day.
Tesla is.
What about Oxy?
Occidental, it's oil.
I know.
Of course, Buffett's been buying the heck out of it. So.
Oh yeah.
He basically owns the company now.
He was.
I think he's the largest shareholder.
Yeah, I remember seeing that. I remember putting notes on this thing that this is when Buffett started accumulating it.
Wow.
So
he's pretty smart. Good investor, that guy is.
Yeah, I think he's probably a little early on this market myself, but he buys whole companies.
I know. He bought ticker Y, Allegheny. He's like, I'm just gonna grab the whole.
I think didn't they add more Apple shares last quarter? They're probably down on that.
Didn't they add Buffett?
Yeah.
Berkshire, you mean? Yeah, I think they're always adding to their Apple.
Does Warren have like an individual portfolio too? Probably.
No. Berkshire Hathaway is his portfolio.
Okay.
Yeah, exactly.
Yeah.
Oh shoot, Zen Bullish.
Dude, Zen Bullish, you gotta not look at that stuff on days like this. You really don't.
I mean, I think you can look at it.
I know. I'm a strong opponent of looking, or I'm a proponent of not looking at your long-term shit on days like today. I really am. Okay?
I've actually told my friends that too. That
you gotta control your emotions. You
that
gotta
have asked me how to get involved in investing. I'll be like, download the Robinhood app, set a recurring investment into SPY for like 20, however much you can afford, $25 a month, $25 a week, whatever, and then just delete the app. Your portfolio's still there. You don't need the app.
Delete the app.
I've told my friends this. You don't need the app on your phone. You can re-download the app in 5 years, and it will still be pulling money out of your account every week. And you'll re-download the app and look at it and be like, holy shit, like, I didn't know I had this much money.
I've used that trick before.
I've never heard of that one before. That's funny.
I like it, actually. I did that years ago before apps were out, but I shut off my machine. I was sitting trading, and I had a trade that I'd put a hard stop in, and I wanted to pull it out because I wanted to, and it was about 10 minutes before the close. I was just like, I was forcing myself to be disciplined, so I just shut my machine off.
Nice. No,
so, back then, 15 years ago, they didn't boot up quickly like they do today.
Right.
So I stay away.
It's a
good idea. Actually, I like it.
It's a neat trick, AB. All right, wait. What else did we have? Do we finish on Oxy? Sorry, did you ever give your take on that?
Not really, but I mean, I'm not at least in the short term. I'm not bullish on. I think that oil is going to drop in the short term. And when I say short term, the next 1 to 3 weeks, maybe 4. So I would expect Oxy to come down. I think if it gets down in this $50 to $52 range, it'll probably find some support right in there, I would think, and then head back up. So if I get any kind of signal that says that we're going to hold this level, then I would get bullish on them. But
what about John Deere? It may be difficult because they had earnings this morning, so the stock's down like 15% today on their earnings report. I don't even remember what the numbers were. Let's go. I got to go to a news feed. I'm looking real fast. John Deere earnings this morning. EPS beat, sales beat, guidance raise. Yeah, this was a good report. Yeah, really good report for John Deere. Market don't care about that though. And it's hard to look at patterns on days like this though, right? I mean, there's no. You have a massive gap down. It's very difficult to say.
Yeah, and there's not. I mean, look at the long-term picture of this thing. There's not a whole lot to. There's not a whole lot to stop it. You got to go all the way back to the late '90s to find a minor support in there. 235. There's a little, I guess there's some here, but
Yeah.
those are the major levels right there. But I would expect it. I mean, if this market continues to drop, I would expect it to come back down here, this 170 area.
All right, here's one that's off the beaten path from Happy Muhammad. ANGH. This is I think we had them on the show. I think we had it's Angami or Angami. We had them on like a year and a half ago. I think we had them on the show, maybe around the time that they IPO'd or before that. I don't remember exactly. We definitely had this company on the show once, and this is like the Spotify of the Middle East, and so not a super long chart here. Not a lot of history to go off.
I mean, it's only been out for a few months now. It looks like.
Yeah,
it's been public. Maybe you got them before that, but it's hard to, new stocks like this is hard. There's not really any history to go off of.
Yeah.
So,
yeah.
That's like we were saying earlier, support and resistance, you need a certain, the more hits you get on it, the better it is. So, from a technical analysis standpoint, there's not much to do with this. I mean, as far as you got a little tiny bit of support there, but it's so minor that, what do you do with it? So
are there any names right now, Tony, that are just screaming shorts to you or screaming buys? It doesn't sound like any screaming buys, but maybe some screaming shorts.
I know on my list there was quite a few that still looked pretty good. I mean, a lot of things are just super beat down.
Yeah, I mean, it's hard to go short some of these names that are already down 60, 70%, right?
Yeah, this is like Bank of New York it's off from 64 down to there. So the question I always ask, looking at a risk reward perspective from an odds perspective, what are the odds this thing continues to fall? I mean, it very well could. It could keep tanking, but it's also got a decent likelihood it's going to bounce because stocks don't fall forever.
Well, some of them do.
Yeah, Enron did. I know people that are buying Enron as it fell. Like, buy it. It's going to go up. It's going to keep going up. It's like, yeah. This is one I've liked. I've been keeping an eye on this for the last week or two. That we've got a little descending triangle going on. I'm just not sure. It's Diversified Financial. I'm not sure what they do exactly, but the pattern itself is nice. And it broke the support, and it did it in a big way, and it's been dancing around it for the last week. So if this cracks to the downside and makes another move, and the part I like about it is that, 49 to 40, that's the target. That's 9 points. That's over about 20%. So if you're buying options, I mean, if you trade options like me, I buy puts, and usually for every 1 percentage point the stock moves, you get about a 10% move in the option. So you get a 20% move in the stock, you're looking at a 200% return on the option approximately.
All right, Tony, I want to end it with this question. It's got nothing to do with individual stocks, nothing to do with charts or patterns or anything like that. But this is from someone in our chat just a few minutes ago. I have a margin call. Should I sell here and take the loss, or wait for next week and hopefully the market rebounds and the margin call goes away? So,
I can answer. I just watched the movie last night.
Funny. A couple things we don't know that would help inform this answer. One, I don't know what rules your broker has. Every brokerage has different rules with regards to margin calls. I've never even gotten to margin calls. I don't even know what that's like. Maybe Tony has, which is why I'm asking him. But like, whatever rules your brokerage has, I don't know if they're going to go into your, maybe they've told you they're going to go into your account and sell for you after a certain date or a certain price or a certain time. I don't know. Tony, has this ever happened to you? And if so, how'd you handle it?
Years and years ago, I had a really small margin call just one time. And I sold what I had. Because it didn't look good. I think that was in the 2000 crash at some point. I can't remember what. Yeah. When it was, but so long ago I don't remember. But back in the old days, back then, actually, I was a broker for a while. So
yeah,
Wait,
brokers can they get margin called? I guess anyone can get a margin call, right?
Yeah, but I mean, as far as the rules margin goes, if you don't meet your margin call, they're going to sell your stuff for you.
Yeah, right, exactly. So it's almost right. It's almost a moot point in a way. Yeah. I don't know. I really don't know. If they're going to sell it for you, they're going to sell it for you if you wait long enough, right? Mm-hmm. So someone just lighten up said a 4-day grace period. I mean, you got to really ask yourself here: do you really think the market's going to turn around in 4 days here? I don't know what your position. I don't know. We don't know what the trade is. We don't know anything, right? Yeah. But whatever you've got, do you really think it's going to turn around in the next 4 days? And something else to consider here is not just the financial thing, but the emotional aspect of this. Right? Just think about this. So it's a Friday afternoon. You've got this margin call, which means you probably are going to have to deal with it next week. Which means you're probably going to think about it all weekend long. Do you really want to think about this thing all weekend and take it through Monday and lose sleep over it? Or do you want to just get it over with now? That's something to think about too, right? And also, please don't use margin if you don't know how margin works and can't afford the margin call. And
the same thing with options. Options are just a form of leverage. So is margin. So
yes,
and that's actually if maybe going back to historical stuff, the 29 crash, because the margin back then, that's part of the reason that created it. The margin was 10%.
Yeah,
it 50. So people were getting margin calls. That's why it tanked like it did, is because they're getting margin calls and they can't meet them. So they just started selling. Brokers just started selling for them because they had to.
Arbitrary. We don't care. We don't care the price. We don't care anything. Get out. Get out. Get out. Aaron knows all about this because he just watched the movie Margin Call last night. So you're basically an expert. Basically an expert.
It's a tough call.
Although I don't think they ever said Margin Call in the movie.
No, they don't.
They don't?
I don't think so.
I kept waiting for it. I kept waiting for them to be like, "Oh, we're getting Margin Call," and it never happened.
No, that was the whole thing was a margin call. They just don't say it.
Okay.
Or anyway. All right, Tony Benson, patternsinaflash.com. Tony, great to talk to you as always. It's been too long. Have a great rest of your day. Enjoy the weekend, and talk to you again soon.
Thank you. See you guys.
Alrighty. That was a nice fun segment. I was like talking to Tony. It's 1:33, and we're supposed to go to 2 o'clock. Man, what do you want to talk about in the next 27 minutes? I have some ideas, but I don't know if I have enough ideas to fill 27 minutes.
Well, we can talk about Margin Call for a second.
Didn't we do that already?
The movie?
Yeah, we didn't do that, or was that off the air?
I think that was off the air.
Oh shit! I don't.
Have we? Hey, squad. Have we talked about the movie, not like an actual Margin Call?
Hey, yo, have we talked about the movie yet? People.
Hey, yo.
Unfortunately, no trivia this week. A third of the Benzinga TV production crew is out of the office at conferences, so we're a little bit short-handed here at Benzinga, and I didn't really have time to recruit other people to do trivia. But I promise you, I promise, we will do trivia each of the next 2 weeks. I promise you that. You know what we have not done in a long time is a Guess That Chart segment.
I was also going to say Wordle, and then I was thinking about it, and I feel like Wordle has just completely fallen off. And if Wordle was a stock, people would have been buying at like the very, very... I mean, New York Times basically did that, like bought it at the top.
Did you see what the New York Times said about Wordle in their earnings call?
No.
They got more page views from Wordle since they bought it than they have it from all other.
Oh, it was a
games
steal.
Ever.
What New York Times got it for? I don't even know what they bought it for, but it wasn't that much, and it was a great move. I'm not saying that. I'm just saying if Wordle was like a publicly traded thing that you could buy, people would have been buying.
Yep.
When did Wordle blow up? Like January or?
Maybe January.
Whenever that was, like people would have been buying February. Up there, and now it's like falling off a cliff.
I've quit the Wordle thing. I gave Wordle credit. Wordle lasted a lot longer than HQ Trivia did. I do have two group chats that are still active Wordle chats. I quit.
I'm with you, Happy. Where like once I lost a streak, I had a streak of like 35 days in a row going. I kind of lost for it after that. But wait, what happened? Did HQ Trivia? Did they just run out of money? Like what happened?
Yeah. I think
like they were giving away money, right?
So it's actually kind of sad. The co-founder of that company actually died. I think that happened before.
But he was like a Vine guy, right? He came from Vine to HQ.
I don't remember exactly, but I think he died. I think he died before the game really blew up, and then it blew up, and like they weren't. Yeah, they didn't have like the runway, and like it was just like too much too fast. Kind of like Clubhouse, I think.
Oh, it does
just
look
too
like,
much too fast.
It does sound like from the chat we're getting a little bounce in the SPY. Let's check it out. Yeah, sure. Yeah, we're still down 2% or 1.8. Let's check Tesla. Oh yeah, Tesla got a little bounce too. Now only down 9.5% instead of 10.5%.
All right, real fast. Let's just look ahead to and then we'll talk margin call. But let's look ahead to next week. As far as the market goes, we're sort of approaching that lull period. Actually, I would say we're in the lull period now. There's really not a lot of macro drivers, and there's just a general lack of catalysts. Right? If you think about things that can turn the market. News events that can change minds. macro events like a Fed meeting where we don't have any of that. We don't have one of those coming up. We don't have really any big economic data for a couple of weeks.
Wait, while you're saying
And
this,
we're coming out of earnings
while
season.
you're saying this,
What?
Fed's Bullard,
I don't give a fuck. What?
who's
sorry,
been
sorry for the language, but
he's been the biggest like hawkish dude, right?
no, he's the dovish guy.
Oh wait, who am I thinking?
No, I'm sorry. Wait, Bullard wants to go more. I'm sorry. Bullard wants to go more.
Bullard's
Yeah.
been the one calling
Yeah.
for like the biggest rate hikes.
Yeah, okay.
Fed's Bullard says rates can be cut in 2023 or 2024 if we get inflation under
Dude,
control.
Oh my god, I'm sorry.
Wow,
to
just as Bullard used to set the tone for FOMC's hawkish shift, it looks like he is now the one laying the groundwork for a dovish escape hatch. I love it. I've been saying that we still, like, I get it. The one thing the Fed can do is raise interest rates to fight inflation, but we haven't really let everything play out in terms of like the supply chain normalizing, demand normalizing.
All right, you're saying he just flipped on us? Is that what just happened?
Yeah, Bullard, the biggest hawk.
The biggest
just
hawk
went
is now a dove.
Yeah, he's a St. Louis guy too. Well, I don't know if he's a St. Louis guy. He's from.
And that's exactly what happened. That's exactly why.
Yeah.
Yeah.
And just as you were saying, there's no Fed macro.
Wait, I thought we had FOMC minutes this week, and I just totally ignored it. Is that next week?
No,
Oh.
FOMC had they had a press release or something.
It was minute. I thought the minutes were out Wednesday. I assumed I just didn't care.
Yeah, this was
but
10 minutes ago. Let me make sure we have. Can you check and make sure we have this in pro?
No, it's not. News desk. News desk, get on it, man. I hope they have it. Yeah, I'm with you. He's a flip
Big
flopper.
tone shift from biggest Fed.
Yeah, Oliver, this is the explanation for this move right there. Wow. All right, let's see.
We knew that was gonna happen. We knew. Wait, hold on.
Well, they're only raising rates so they can lower rates. Everyone knows that.
Yeah, Hunter, I do agree with you there. I think if we were gonna raise rate, we should have. I
can't. Okay, fine.
I think the Fed, like, maybe they're realizing they kind of fucked up right here, and that they're saying like, okay.
No. They didn't just realize this.
But we're gonna see. Okay, and I'm not gonna make any crazy predictions, but we're gonna see next month if we get confirmation that inflation is continuing. So inflation has been going up and up and up. We got last month was the first month that inflation was lower.
Yeah, month over month.
Month over month.
Yeah.
And if that happens again, that will be kind of some good confirmation that maybe we've seen the peak inflation. If we go back up, obviously that's very bad, and we will see. But yeah, the Fed. I mean,
All right.
I don't know.
I can't. Okay, let's just watch this. We just have to watch this now. How seriously?
Wait, how are these growth style? Like, how are like the Asana?
Well, everything just turned.
I know, but you would think the growthiest names are the ones that are going to.
No, because you have these algos that just will read a headline and just like arbitrarily buy everything, which is what happened. You can go to any growth stock and everything just got bought there. So how seriously does the market take this? How much weight do they put behind this one comment from this one? Isn't he a non-voting member anyway?
He's a voter in 2022.
Oh, he votes now? All right.
Hey, can you explain to me how that works?
They rotate. The Fed board, the Fed governors all rotate. Who gets to vote? Who's a voting member of the FOMC and who's not?
But yeah, so Hunter, I agree with you that like in retrospect, maybe some gradual rate hikes while the economy was growing and doing well once we got past COVID would have been the smart thing to do. Instead, they waited about a year. All these assets got way overinflated, and then instead of kind of gradually raising rates, all of a sudden we were like talking about hiking the rates like faster than initially thought. And then you that in addition to the quantitative easing, just makes for a very tough macro environment for investing. And raising rates is actually fine. And historically, you can look like stocks have done well in times where we've raised rates, but as long as that's coupled with strong economic growth. And what we're seeing here is so much fear in the markets playing out that now the Fed is starting to get worried. okay, maybe have we overstepped the rate hikes for inflation that now we're going to hurt the economy to where it's not growing, and then you have what you don't want, raising rates and a shrinking economy. So I still think that, and while there are some things that in the economy that don't look great right now, I think for the most part we're okay.
Can someone remind me? I had thought, or maybe I assumed incorrectly, that the Fed had already begun unwinding the balance sheet, doing the runoff and selling the mortgage-backed securities and treasuries and all that jazz. Did they not?
Wait,
start?
we still have mortgage-backed securities?
Yeah. Oh, yeah. Of course we do. The mortgage-backed security, that in and of itself was not the problem. It was mortgage-backed securities on like shitty mortgages. That was the problem. Mortgages that shouldn't have existed in the first place. But did the Fed begin selling June? Thank you, Julie. I thought you're right. That's what they said last time. I don't know why. Maybe I just got my things confused. Okay, so here's the situation. For the moment, I think for the immediate term here, we've got ourselves a level. And like I'm in the Qs, but you can look at the SPY, do whatever you want. You've got a very clear double bottom, clear as day on the 15-minute chart.
Oh yeah,
okay?
I'm with you there again, Hunter. I don't think we've seen some. See, that's okay. Even when we talked about this with the Target earnings yesterday, even the Target CEO, when you dig into the earnings, he wasn't saying we're seeing recessionary actions from consumers. He's saying we're seeing a resilient consumer. They're just spending differently than they were previously, and they were, they had their resources allocated to the way consumers were spending 6 months ago, and now that's changed a little bit, but the consumers are still there. And I don't know if anyone, again, like this is all anecdotal, but traveled last week and we were in Vegas, whatever.
Yeah.
It's like people are out there spending money.
Yeah.
And then Hunter, I agree. If inflation does start to easing, okay, so we really started talking about inflation like last March, April, May, like last spring. We'll just say last spring.
Okay.
And that's exactly when we started talking about inflation, is right when we saw consumer sentiment start dropping, like lowest consumer sentiment. It's lower now than it was at the peak of COVID. It's lower, whatever. But the consumer spending never really dropped with the consumer sentiment. So people were saying they don't feel as good about the economy. They don't feel as good about, maybe what their financial situation is going to be in a year or so. But they were still spending money. And we can see that indicated in retail spending numbers. And so, yeah, Hunter, I'm with you 100%. If we... And I have said that to me will be potentially the next bull, kind of bull news that we get to kind of turn this market around is if inflation does indeed start coming down.
I don't know why my chart did that. Sorry. Let's get the Qs of the SPY back up. All right, gotta watch the 15-minute chart now. Let's go back to the SPY actually. That's what we're watching.
Are we still going up?
Yes.
Hell yeah.
Everything is going up. Every stock is going up.
Hell yeah, Bullard. He's just happy the Blues won last night.
Even Target is going up. Even Walmart's going up.
Of course they are. They're good companies.
How's Raw Stores doing? Yeah, start going up. Everything is going up on this. This man. Did Bullard just turn the market for the day? We'll see. We'll see.
Maybe I shouldn't have sold that Tesla earlier.
I mean, it would be an epic rally if we can close green today. If we get to unchanged in the SPY, we're talking 393, right? That would be freaking epic. We'll see. We only have a couple hours. Quick programming note: I don't actually know if Joel and I will be able to do at the close today. Joel had an appointment, and I also had a thing, so I'm gonna give it like a 50-50 chance that Joel and I do at the close today, just so everyone knows at 3:30. If you don't see a show, it's because we're not doing a show. We both have something going on at that time, which is unfortunate and weird. Okay, what I wanted to do in the meantime, right before you said all this Bullard stuff.
Yeah, we also never talked margin call.
Money Mitch is not even here, man. Money Mitch is out at VCon in Minneapolis. So Money Mitch is out. Joel and I both have a thing. Independent of each other. If you want to hop on at 3:30 AB, you're free to. But
I mean, I will if you want to. I don't care.
We'll see. We'll see.
I forgot Winston Churchill said that Zen bullish. I forgot.
What I was gonna do was look at next week, okay? Because like I said, we do have a few earnings here. So let's go to the calendar in Benzinga Pro. Go to our dates, and we look at what's Monday's date, the 23rd. We'll just go look at the 23rd, and we'll go and start just looking next week, the 23rd through the 27th. I like to sort my earnings calendar in Benzinga Pro by the importance column. And there you can see, look at this: Costco, Alibaba, Nvidia, Macy's, Marvel, Baidu, VMware, Zoom, Canopy Growth, Big Lots, both major U.S. dollar stores report, Burlington, Medtronic, a big medical supplier. We got The Gap. We got Workday. Wow. I was not expecting that many big names next week. Dick's Sporting Goods, Williams-Sonoma. We got some software, cybersecurity, Splunk. We got Snowflake. Interesting SaaS play. A lot. We got a home builder and Toll Brothers. We got Best Buy. A lot of big earnings reports next week. Wow. And it looks like most of them, it appears almost all of them are Tuesday, Wednesday, Thursday, which is normal. So, cool. A lot of big names reporting next week. That's exciting. We have not yet come out of earnings season. I thought there was like a handful. I didn't realize there was that many. Hunter asked any favorite cybersecurity stocks.
We talked about this yesterday.
Hunter, I have and will continue to own the CIBR. That's what I bought.
I like Fortinet. Palo Alto.
CIBR is your cybersecurity, one of your cybersecurity ETFs. I can tell you what the largest holdings are if you give me like 15 seconds. I'll look it up for you. I don't know off the top of my head. CIBR, your First Trust NASDAQ cybersecurity ETF. It holds Cisco, Palo Alto, CrowdStrike, Zscaler, Mandiant, which is getting bought by Google, right? Yeah, Google. It's got this Leidos Holdings. I'm unfamiliar with Boozel and Hamilton.
I know Leidos.
So anyway,
Leidos owns and operates the metal detectors at airports.
Oh, speaking of that, I want to give a quick plug. If any of you travel at a rate of, I don't know, once a year or more, I cannot recommend TSA, in the U.S. at least, TSA PreCheck. I cannot, for U.S. domestic travelers in the U.S., TSA PreCheck, I think, changed my life. I just got it like 3 or 4 months ago. I only used it for the first time going to Vegas and back. Unbelievable. Worth every penny. It's like $80 for like 5 years or something. It was like $100 for like 5 years, something like that.
Berlin, I'm down to go golfing next time. I'll beat you, but I'm down.
Peace out, Berlin.
TSA
PreCheck, man.
On
Chef's kiss.
On Sunday when I was flying home from Vegas,
Yep.
I was like, oh, okay, it's Sunday from Vegas. Like a lot of people come to Vegas for the weekend. Got to get to the airport a little early in case. I had never I literally walked. There was no line to show the first TSA agent my ID, and then there was no line to grab my bins. And it was like the craziest thing. I had never gone through security so quick in my life.
Yeah.
But that was without pre-check.
Yeah. I'm just saying.
It seems to me pre-check clear.
Investment.
It's like a new age caste system. I'm against it.
It's discrimination.
Yeah.
Yeah.
We should all be. In fact, there shouldn't even be first class on planes. We should all just be forced to sit.
I do think we need more discrimination on our roads. I don't our parking lots too. I hate it when I'm in a tiny parking lot. I've got a small car. I've got a Ford Fusion. I hate it when I'm in a tiny parking lot or parking garage, and there are these big, huge trucks that I have to avoid. You know what I mean? Yeah. Trucks. Let's separate the trucks, okay? I'm sick of having to be cautious around these huge F-150s or whatever Toyota Tundras that these people have that they're too big for the spaces. They take up 2 spaces. They don't go around turns easily. It's already cramped in there as it is. I want separate parking lots for cars and for trucks. Okay? Can we make that happen, you think? Probably not. That's what I want. I want trucks need their own lane as well. Give pickups their own lane. I don't want to be in the massive blind spot that is that F-150s have. Spy's still going here. Yes, trucks should have their own highways. Completely agree. Give them their own lane on the highway. Get them out of my face. If you own a truck, you might even agree with me, frankly. Let's make it happen. Infrastructure. Biden, get on that. Okay, Spy's still going here.
I mean,
a little bit.
like it seems like we're kind of stalling. I guess we're not giving up the games, but we're not like ripping.
I'm not. Yeah, I'm not actually excited. I'll be like really like excited if we got to like 385 and 386. Then that would be like pat on the table. Like, let's go. I don't know. What else do you want to talk about? Margin call? What do you think? 1 out of 10. Give us the Aaron Bree review of Margin Call, the 2011 film starring
Kevin Spacey,
Zachary Quinto, Kevin Spacey, Demi Moore, and
Jeremy Irons,
and Paul Bettany. Give us.
They call it an ensemble cast.
That's the word. Give us your 1 to 10 review.
I'll go like 7.
Fair.
I think it's one of those movies. It literally, like, the whole movie is over the span of like one night.
Right.
Which is cool.
It's very cool.
I like that. I liked. I guess my one criticism, which and Spencer and I were talking about this off the air, was I was thinking like in my head, okay, if like I was watching this with my mom or something, she would probably have no clue what the fuck is going on because
It's a little difficult to follow.
I had to like. Kind of like slow things down, and they do, and we talked about this as well. The writers give a really good opportunity to explain to the audience for like in layman terms what's going on, because one of the characters says, "I don't understand this. Just explain it to me. Like, just speak English to me." So then they do that, and actually do that a couple times in the movie. And I thought it was really interesting. I thought there were some really, what's the word? So sometimes I'll admit.
I am a car racist. You're absolutely right. Car racist? Yeah, that's what I am.
A carist?
I'm a carist. For sure, I am.
I think there were a few like really. I think there were like some good points made in the movie just about like Wall Street, finance in general, greed, and that was one of my takeaways from it. Was just that like and then they explain this in the movie. Like, we can blame the 07-08 crisis on subprime mortgage loans and mortgage-backed securities and credit default swaps and all these like financial instruments. But what drove those financial instruments to exist in the first place and become popular were people wanting to make more and more money. And the guy.
So risk never leaves is, I think, that's your point, right?
Well, it's just like and I told you we were talking about this.
Gambling mentality.
There's a scene in the where the guy's in the car talking to the 23-year-old analyst, and he's like, all these people, once this crashes, they're gonna blame us, but they're the ones that like when we're doing our job are the ones that are like the happiest with it. It's like they're like, oh, like these like Wall Street people are so reckless when there's a lot, which to be fair, like a lot of these hedge funds and banks and stuff probably were getting a little greedy and doing too much, but it's a lot of people being invested too, saying like, oh, there's that new fund that gets me 25%. I'm going to go with that. Like, and so the guy says something about in the terms of like, I'm over here. He's like, I'm here in Wall Street, like pushing the scale in favor for them. People say they want like a fair world, but they don't. They want us pushing the scale for them. If I take my finger off that scale, the world gets like real fair, real fast, and people don't really want that. And it's like, so
don't tell me you're getting sympathetic for the banks.
No, not at all.
Okay.
Not at all. I'm just saying that my bigger point was just that like that greed will manifest in a new financial instrument, whether it's mortgage-backed securities, whatever, and that will get us to that point. And then Jeremy Irons, talking to Kevin Spacey's character, talks about he rattles off like 20 different years where we've had economic downturns, like going back to like the 1700s, and he's like, that's just how it goes. Like, we're humans, like we can't help it. We go we get too greedy and do too much, and then this happens, and then it'll continue, and it's just time is a flat circle.
Where'd you watch it? Netflix?
Yep.
Okay, it's on Netflix. It's called Margin Call. I hadn't heard of it. It's one of the best Wall Street movies of all time. There aren't that many of them, but this is one of them, and it's a fantastic.
I'm gonna do a big like spree of different financial like books and movies because I want to watch Big Short. I've never seen Big Short, but I want to read.
I can't believe you never seen Big Short.
I want to read the book. Well, I think literally for like 10 years I've been like, oh yeah, I'm gonna read the book before I watch the movie, and I've just never read the book.
I just finished the book this week.
I'm gonna read the book first, which I love. It's Michael Lewis, right? I love Michael Lewis. I mean, he's a great author. Moneyball, Blindside, you name it. And
Flash Boys.
Huh?
Flash Boys.
What's that one?
It's the high frequency trading books, but
that's why like I love Michael Lewis is he has such an affinity for finance and sports, and I'm like, you're my guy. Like
yeah.
And he writes about like Wall Street in a way that makes it like pretty interesting. But then I got to go back and his first book was Liar's Poker.
Great book.
Haven't read that either, so
Great
I'm gonna
book.
do that. Big Short. What are the other good ones? Trading Places.
Trading
Boiler
Places,
Room.
The Big Short, Boiler Room. There's a movie called Rogue Trader, which I haven't seen. I think it's starring Ewan McGregor. I never saw that. There really aren't that many.
I will say this. I really think Wolf of Wall Street is kind of an overrated movie.
It was fine. Yeah, it was
Like
alright.
it's entertaining, but
Yeah.
and I'm not like some huge movie snob where I need every movie I watch to have some like deep meaning and takeaway. Like if a movie's an hour and a half long and it entertains me for an hour and a half, great, it did its job. Which I can say that about Wolf of Wall Street, but what I will say is there's just not a lot of like character development. You know, like he's kind of just
It's just
shitty dude the
it's just an over the top
whole way through.
movie for over the top guy.
And now Jordan Belfort is like shilling shit to this day.
Dude, I can't believe it.
Like to this day.
I just want to say, like, we had Jordan Belfort not on this show, on a different show, and I couldn't believe it. I couldn't believe we had Jordan Belfort on our channel.
Yeah. And you
all
take
right.
Margot Robbie out of Wolf of Wall Street, it becomes like I wouldn't even watch it.
All right, guys, that'll be a wrap for us today. We got to vacate the desk because the Moon or Bust guys are coming on here, and oh man, do they have a show prepared? They were talking to someone who used to be on the FBI's most wanted list. Is that true? Is he still on the list? Okay, he's off the FBI's. How does one get off that list? That's what I want to know. So they're going to talk to this guy who was a hacker who's on the FBI's most wanted list, and he like made bank in crypto.
Hell yeah.
So that's what life's all about.
Someone tweeted yesterday when Martin Shkreli got out of jail, they were like, I'm like so sad Martin Shkreli missed out on crypto. Like there would have been some good storylines there.
All right, we're done. If you would be so kind, drop us a like on our way out. We'd appreciate that. Hey, while you're there, if you want to subscribe to our channel, become a member, give us a super chat. All those things are appreciated. What the heck was that?
What that sound?
Yeah.
I have no clue.
All right, that was weird. I just heard a sound in my ear. We just heard a sound in our ears. All right, great seeing you all, as always. If I see you all on At the Close, that'd be great. If I don't, have a great weekend. We'll catch you guys on Monday. Stay green out there. Don't check the long-term portfolios. Just don't do it.
Peace and love, y'all. We'll be back Monday. Everything will be okay.
Just don't do it.
Get outside this weekend.
Everything will be okay.
Get outside this weekend. I don't know. Have a beer.
Play some Frisbee or
Smoke
something.
a cigarette.
Play some Frisbee.